Easy, is it?
Okay, a bit rushing.
Rushing. Huh? Hello. Oh, you need more practice, oh, Kelvin. Shows that lack of practice too. Even more pressure in the exam. The exam also, I think, they only give you 2.5 hours only. So try and make sure that you do. Can keep practicing. Yeah. Can someone contact Carol? Oh, no one. Where did we stop with the inventory? Did we stop at number 5, recording in the ledger? Kevin, what do you think? Was it number 5, recording inventory in the ledger? You muted.
Yeah, forward already.
You forgot already. Oh,
Somewhere
okay.
around
I think
the weighted average.
no, we have done that, and I have gone through the perpetual method and periodic method. So we stop at recording inventory in the ledger. Okay, I will continue that, but before that, we start with new chapter, chapter 9, year-end adjustment. After we have done this, then we move on to continue with chapter 8. Okay, that's my plan. So we cover the new chapter first, chapter 9, year-end adjustment. Then after finishing this, then we continue with the last part, the chapter, number 5 of inventory, because you see what will come up in the exam already been covered by us. That is first in, first out, weighted average. So you must, you expected to be able to record all the movement of the inventory in the stock ledger card. Okay, so using first in, first out. First in, first out, of course, we have to record it in different, for every new batches that we have bought. So we need to put row by row so that we know, we can detect which one came in first and which one came in later. Whereas for weighted average, after the new purchases, so we just add the total, and then after that, we divide with the quantity in order to get average cost. So that average cost will be used as the cost of good issued, isn't it? So that is the main thing that we have to, you're going to be tested in the exam. Okay, and then we have covered advantages, disadvantages. So that is also part of the topic that you will be tested on. So now we move on to the new chapter. Okay, so the rest of the chapter I will cover as we have covered the new chapter. Yeah. You do the recording first. Yes.
Morning.
Yeah, put on your camera. Thank you. All right. Can you remember where do we stop with the inventory? Is it in number 5?
Not sure. Forgot it.
Not sure also. Okay, never mind. Okay, we start with new chapter. This one. Year-end adjustment. So first thing, you need to be able to reason. Okay, I mean, you would know what is the reason why we need to do year-end adjustment. Adjustment meaning either we add or less. So that is adjustment means we increase or we reduce. Okay, why is that? Because we want to reflect uh, the true and fair on the financial statement. So reason for adjustment, we have accrued expenses. So one of them is accrued expenses. What is the meaning of accrued expenses? Means the expenses that the business had consumed. They have used the service of that expenses, but the business have not made the payment yet. So not make the payment yet, therefore no recording has been made. Okay, so we have to do adjustment. So we need to increase the expenses. And we also have prepared expenses. This one, expenses that is meant for the following accounting period, but it was paid during the current period. So it's already been recorded because it's paid, isn't it? So we have to do adjustment. That is, we want to reduce the expenses because we want to be in observant of the matching concept. So we only match revenue that is earned and expenses that is incurred at the same period during the current accounting period. So that's why we need to do adjustment. Okay, so if it's prepared expenses, it's already been recorded. So now we only have to reduce the expenses so that we only record expenses meant for the current year only. And not only expenses, income also we have accrued income. Again, what is the meaning of accrued income? Accrued income is an income that is being received, that is being earned by the business, but they have not received the money yet. Earned, meaning they already deliver the good, they already provide the services, but then the consumer have not made the payment yet. So this is accrued income. So if not made the payment yet or not received the payment yet, so that is indicating it's not been recorded. So we have to do adjustment. We have to increase the revenue. That is adjustment, increase. Whereas if it's income in advance, so meaning the revenue is not being earned yet, but we already received during the current year. Okay, meaning the money already been recorded, being received. So we have to do adjustment. Adjustment is we have to reduce that income so that we only record income meant for the current year. That is income in advances. Then, as resulting from the accrued expenses, prepared expenses, accrued income, prepared income, income in advance, same meaning. That will cause an opening balance for the next following year. So we have to be able to understand how to treat for opening balances. Okay. So meaning we have to classify them first, whether like accrued expenses, it become liability because it's already been consumed, business already been consumed, but then they have not made the payment, it become liability. So liability, as you know, always credit balance, credit item, isn't it? Credit balance. And then that will be the opening balance line. If it's prepared expenses, so prepared expenses, as what I've explained to you, expenses that is paid in advance. So meaning the money still belong to the business because it's not been, the expenses have not been consumed yet. So meaning it is an asset. It's the opposite. Just remember one thing, accrued expenses is a liability. So prepared expenses will be the opposite, an asset. So debit balance. And income in advance, so this money do not belong to business. because they have not earned the income yet, so it's liability. So if you know income in advance is liability, then the opposite of in advance, meaning we have accrued income. So accrued income is an asset. Okay, so that is for the opening balance. So what is the reason for adjustment? So like just now I was saying increase and decreases of the expenses, the income. Okay, why? This is adjustment. Why we need to do adjustment? Because this is in observant of the matching and accrual concept. Matching says the cost, the revenue will be matched, the revenue earned will be matched against the expenses incurred. Accrual meaning a concept that is guiding us to do the recording, which is we record expenses as it is incurred, and then we record revenue as it is earned. Okay, meaning incurred expenses. So that include paid and payable. Same goes with earned. Earn also includes receive and receivable. So that's why that is giving us the method of recognizing the expenses and recognizing the revenue under accrual concept. Okay, the costs and expenses incurred in an accounting period are matched with revenue earned in the same accounting period, regardless of the payment made or the revenue received. So that is matching. So it should be stressed that only revenue and costs that relate to the particular period should be matched. If not, they should be excluded. Excluded means we have to reduce the expenses or reduce the revenue. Okay, so that is the reason. In the normal course of the day-to-day business operation, some expenses may still be outstanding, incurred, but not yet paid. Or some may be prepared, not yet incurred, but already paid. Okay, like just the same as my explanation to you. Like some of the expenses we have consumed, the business already consumed, but not paid. But some of the expenses, the business already make payment, but they have not consumed. So this is prepared. So similarly, some revenue had already been earned, but payment not yet received. Or some customer may have paid us in advance. So this is another one, accrued revenue and revenue in advance. So adjustment need to be made in account for this item. Okay, because of the requirement by the matching and accrual concept. So that is the reason. Requirement by matching and accrual concept. So the business need to make an adjustment. Okay, that is only include expenses as it is incurred and revenue as it is earned. And the revenue that is earned will be matched against the expenses that has already been incurred. Okay, the meaning of this item and how we should account for them can be summarized as follows. So this is the summary. So accrued expenses, what is the explanation? Okay, like what I've told you, incurred, but not yet paid. What is the meaning incurred? Okay, incurred includes paid and payable. Paid meaning as you consume the expenses, immediately the business make the payment. Payable means the business consumed, but the payment is not being made yet. So that is incurred means, is a broad terms. Okay. So what is the action to be included as this year expenses? So that is the action, meaning we have to increase expenses because we want to get the actual expenses for the year. So we have to include, as what I've said to you, because it's not being paid, it's not being recorded. So we have to record, right? So prepared expenses, what is the definition? Expenses not yet incurred, but have been paid. That's why we have prepared, meaning it's not being consumed by the business, but the business already made the payment. So if that is the case, what is the action? So to be excluded meaning we have to reduce the expenses, okay? Because this is in accordance with the matching concept. Accrued income, income earned but not yet received. So what is the action? To be included as this year income, okay? Meaning already been earned but not yet received. So we have not recorded yet. So if it's not recorded, so that is the action. We have to record it, included in this year income. What about in advance? This one, not yet earned, but have been received. So if we have received, meaning we have already recorded. So we have to do adjustment. That is the action, to be excluded from this year income. So remember, okay, income is credit item. Yeah, expenses is a debit item. So what does debit item and credit item means? Increase for expenses, it is on the debit side. So if you want to reduce the expenses, then you have to do credit entry. Whereas for the income is a credit item, increase is a credit side, isn't it? So you want to reduce the income, you have to make a debit entry. Now, because of this nature, so we simplify it so that we can, record it faster by using the common sense. Okay, since the nature of these prepared expenses, prepared expenses meaning we have not consumed, but we already paid. The business already paid in advance, so the money belong to the business, still belong to the business. So it is a current asset. So this one you have to memorize. So because if you memorize, when you do the recording, it's much more faster. Current asset, prepared expenses, the money, the logic is the money still belong to the business. It's not been incurred yet. So it is an asset, current asset. Okay. Now, what about accrued expenses? Accrued expenses, okay, is an expenses we have the business already used but have not made payment. So it's liability. So under current liability. So that is the only thing you remember. You remember that one first. So if it's an income, prepared income, yeah, is the opposite. Prepared income, you see, if it's prepared expenses, an asset, isn't it? So remember, if it's prepared income, is the opposite, liability. What about accrued expenses? Accrued expenses is a liability, but then if it's accrued income, is the opposite, is an asset. So that's how I remember. So when I memorize this, when I do the recording, it will be much faster. Can you get it? Farah? Do you
Yes.
think is it acceptable?
Yeah.
Yeah. Just a second, go. Okay. Now, let's go through accrued expenses one by one. Accrued expenses, meaning expenses incurred during the year, but not yet paid. So remember, bear that in your mind that if it's not being paid, no recording at all. Because normally we record as we make payment. So if it's not paid, we haven't made the payment yet. So it's not, it's not been recorded yet. So just like what we have in this illustration, on the 1st of January, Alex ran a shop lot for his business. The rent is 10,000 per month. The total rent paid by Alex paid up to 31st of December during the same year is 110,000. Normally, you will be given illustration for 1 year. So if 1 month is 10,000, so 1 year should be 120,000. But what is being paid by Alex? Alex P, yeah, the business. Okay, we are Alex, we are the business. So we make payment 110,000 on it, the expenses on rental. So the last rental due on 31st of December has not yet been paid. So meaning we have recorded the payment, okay, which is, you can see in the trial balance here, rental is a debit item, so it is on the debit column, 110,000, isn't it? So it's already been recorded. As what I've said to you, everything that is in the trial balance, the double entry already been recorded. Okay, so now we want to close the account and then we have to close off and we have to balance off, isn't it? So now here the illustration is only expenses, so we have to close off. But then how much rental should be recorded in SPL? So not 110,000 only. We have to do adjustment. That's why we call this year-end adjustment. We do the year-end adjustment to ensure in observance with the matching concept. Okay, that is, or the accrual concept. That is, we have to record the expenses as it is incurred. So we have incurred, meaning we have consumed the rental for 1 year. But so far, the payment that we made is only 11 months, not 12 months. So we have to do adjustment. Okay, because this is not recorded yet. No payment has been made. So how do we identify? So this is how do we identify. So because knowing per month is 10,000, so we need to plus 110,000 plus 10,000 should be 120,000. So we have to do the adjustment. So the adjustment is because it's not payment, yeah, it's not been paid yet. So the adjustment is we have to increase the debit item, the expenses. So increase the debit item, meaning we have to debit rental. So that's why this is debit rental. So knowing rental is being debited, so the corresponding entry must be what? Must be credit, isn't it? So the credit account would be, we create accrued rental. So because this is known as accrued rental, the term is accrued rental. Accrued rental is referring to rental that is being consumed by the business but have not been paid yet. Okay, so that is the suitable terms. So we credit accrued rental. Then we do the general journal because this is the prime entry. Why the prime entry is general journal? Because we did not make the payment by cash, by check. It's not sales cycle, it's not purchase cycle. So we use general journal as the prime entry. So what is the double entry? Remember one thing, rental is a debit item. So meaning you want to increase the rental, so you have to debit rental. So corresponding entry must be credit. So that credit, okay, we term it as accrued rental. Then put underneath, yeah, the in bracket, okay, the explanation. What is this general journal all about? So rent for the month of December, due but not yet paid. So this one is not fixed as long as related with the transaction. So you read again the transaction. So rental for December not yet paid. Okay, so you put it there if it's required. Normally, it is required, so you just put the description there. And then by referring this prime entry, so you need to do the posting in the general ledger. So open up rental account. Well, because we already have the trial balance, so the existing entry in the rental should be reflected in the general ledger also. That is, they have opened the bank account, they have opened the rental account, and do the entry. That is, rental account 110,000 on the debit side. The credit side is the bank. Okay, payment. Isn't it? So now we do the adjustment using the prime entry general. So follow this. We have open up rental account, no need to open again, but we need to open the new account named as accrued rental. And do according to this entry. We increase a debit item expenses by debiting 10,000. So we debit 10,000. The red color. So look at the red color and the particular, we in the rental account, we write down the heading of the account as being credited, accrued rental. Okay, so we debit rental account. So corresponding entry must be credit, isn't it? Just follow this. So open up accrued rental and do, okay, the credit entry. Look at the red color here, 10,000. That is complete double entry. And then the particular in accrued rental, okay, make sure this is the heading of the account that you have debited. Okay, debited. So that is the entry that we make based on the prime entry. Then what else we need to do? We have to close off and balance off. For expenses, this is rental expenses. We have to close off. How do we close off? So we post this 120,000 amount. So this is total amount. We make a total line, single line on the top, double line underneath. So it must be in the same row. Okay, and then put 120,000, the highest of both sides, isn't it? Then in order to make credit 120,000, so you put 120,000 here, and the particular you write down SPL. What does it mean? Meaning we close off this account and posted it to SPL. Okay, but for accrued rental, okay, this becomes liability. Okay, so we have to balance off. So underline this with double line, yeah, and then put 10,000 here, and the particular you write down the closing balance. Balance CP, okay, underneath the total on the opposite side will be balance PD. So this is credit balance. Okay, credit balance. Huh? So that is from the general ledger. Then we do the adjusted balance, but normally you are not required to do this, but in case you are asked to do. Okay, in case you are asked to do, so you need to, okay, initially we have, yeah, in the trial balance, only one item, rental 110,000. But after this adjustment, now you need to show rental in bracket, okay, the workings, 11,000 plus 1,000, then become 100, and sorry, this is not 11,000, should be 10,000. This one is wrong. 10,000, because initially we have 110,000. So plus 10,000, 110,000 for missing one figure. 110,000, can you change? Yeah, your calculation, 110,000 plus 10,000. Okay, become 120,000. Right? And then we have, okay, accrued rental account, then 10,000 on the credit side. In case you are asked to do it. So record, because based on this prime entry, so you plus with the existing one. So this is, we only have one item at first. Okay, at first. Huh? So because of this prime entry, so we add 10,000 here, so we got 120,000, and we have a new item in the balance. So this is what we have, 10,000. Okay, and then in the financial statement, so remember SPL is for expenses, and then SOLP is for the liability. So that's why we complete the double entry when we close off this rental income. Sorry, rental expenses. So we credit rental expenses 120,000, so we debit SPL. But because we are preparing the statement form, okay, debit in SPL means less expenditure. So we put rental, they show the working, 110,000 plus 10,000. So we put on the second column, 120,000. In the second column, why? Because this we need to do the listing of all the expenses type first. Then we add, after that, the total expenses, then we move on to the third column. Okay? And whereas in SOMP, so because like what I've said to you is current liability, so you don't have to write down this one. Just put current liability and accrued rental together with the non-current liabilities. So if we have first equity, non-current liability, and then followed by current liability, so 10,000. Okay, so that is accrued expenses. Any question? Can you understand?
Yes.
Correct? Can you understand?
Yes.
Yes, sir. Kelvin?
Yeah.
No?
Yeah.
So I proceed. Next one is prepaid expenses. Understand the meaning first. Prepaid expenses meaning this is expenses for the following accounting period, but it is paid in advance during the current year. Okay, meaning expenses that is not being consumed yet, but already paid in advance. So like what we have here on 31st of December, okay, remember, because it is being paid already, so we have recorded. Okay, we record based on cash basis. So on 31st of December 2017, mobile travel shows electricity expenses of 5,000. Out of this, 1,000 were paid in advance for the period from 1st of January to 31st of March 2018. So remember, first thing you have to identify what is the year end here. The year end is 31st of December 2017 from the question on 31st of December. But, okay, 1st of January to 31st of March 2018 is the following year. So the business or the BOBO, okay, make payment in advance of this electricity. So the following journal entry in ledger account should be made to adjust the prepared expenses of 1,000. So like what I've said to you, okay, this payment of electricity already been recorded. So that is why it is appearing in the trial balance like this. Electricity, 5,000 on the debit side because it's a debit item. 5,000, but this 5,000 is not for the current year. Current year plus with the following year. So which is 1,000 because it's already been stated here. 1,000 were paid in advance. So you don't have to create the figure. It's already there. It's already been, you've been told, you've been given, yeah? In advance is 1,000. So only 4,000 meant for the current year. So we have to reduce this electricity. Okay? It's already been recorded. So how much should be recorded in XPL? Okay, because of matching and accrual concept, it says the amount that should be recorded only meant for the current year, which is we do adjustment. The adjustment is we less. So 5,000 we less with 1,000. So only 4,000 should be recorded in the SPL. Now, what will be the prime entry? The prime entry will be the general journal. Because it's not cash. Now we only do the adjustment. So how do we do the adjustment? We have to reduce the debit item. So how do we reduce debit item? We make a credit entry. So that is the only thing that to remember. Reduce a debit item is we make a credit entry. We credit the 1,000 in the electricity. Credit. So if we know the credit entry is electricity, corresponding entry must be debit, isn't it? Corresponding entry will be debited 1,000. But what is the name of the expenses should we term it? So we term it as prepared electricity. We just add, with the same type of expenses, electricity, we just add the word prepared. Easy, isn't it? Okay, just remember, we reduce a debit item, we credit electricity. And then the corresponding account need to be debited. So what should we name it? Prepared electricity. And this one done at the year end, December 31st. So by having this prime entry, then we do the double entry in the journal ledger. But as this is recorded in the trial balance already, so we have existing electricity account. So electricity account, on the debit side, we have 5,000. So this one we already have. This is the existing entry that we have, 5,000. Okay, and the particular is bank, meaning credit bank, debit electricity. So done. Now we referring with the prime entry. Okay, we follow credit electricity. This is electricity account. So 1,000. It's already been put on red color. Okay, for you to understand. And what is the name of the account that we the particular in electricity account? Well, the name of account that is being debited. So which is we term it as electricity also, but then just add the wording prepared. So prepared electricity. Then open up a prepared electricity account and record, complete the double entry. Just now is credit, so this one should be debit. And the particular, because this is the heading of account that is being credited. And the date must be the last day of the year. Okay, year-end adjustment. That's why we call it year-end adjustment. Now, after completing the double entry, then we have to close off and we have to balance off. Electricity, okay, is an expenses, we have to close off. Prepared electricity is an asset, we have to balance off. So how do we close off electricity? So we make the opposite entry, that is 5,000, sorry, 4,000. Now, first thing, we make a total line, single line, double line underneath. So it must be in the same row. So we put the highest amount of 5,000, 5,000. Okay, and now we don't have this amount yet. We only have 1,000. So in order to make total credit as 5,000, this is the balancing figure, 4,000. So which is, these are the amount that we need to close off and put into SPL. Okay, we only transfer to SPL the expenses for the current year. Because 1,000 is for the following year. So that's why we do this adjustment. So we only take 4,000 and put it to SPL. Okay. So complete the double entry. Okay, in SPL will be debit. This is credit, isn't it? SPL will be debit. But then we are preparing in statement form. So you don't have debit credit, but debit is represented as less. So we put here electricity less electricity, and then we put in a bracket, okay, show the working 5,000 minus 1,000. So according to this, 4,000, 4,000. Sorry, this is trial balance. 4,000, that's why we have less expenditure electricity, 5,000, 1,000. And then the prepared electricity, so we have to balance off. So this is debit here, debit, isn't it? So meaning this is a debit balance. So balance CD, okay, and balance BG underneath the total on the debit side. So this one you have to double line. should be double 9. Okay, this one also.
Must use correct the line. Must use correct line. We're doing the
Yeah.
things.
Yes, you have to. Okay, and then complete the double entry. This is CD. Okay, you must have balance BD. Kelvin, what balance is this? Debit or credit?
Which balance?
Now, can you tell me, is this a debit balance or credit balance?
Credit.
Why you say credit? Which one you look at?
Is the right one? Is it?
You look at balance CD.
Yeah.
No, that's
No.
wrong. You have to look at the balance BD. Where is the location? If the balance BD is on the debit side, okay, then this is debit balance.
Or depend on the BD instead of the CD.
Yeah, and you see, the explanation is you don't have this. You only have this, meaning debit total is more than credit total. Credit total is 0. This is 1,000. So that's why this is debit balance. Can you understand what I'm saying? I mean,
So-
yeah. One more time.
Can you explain one more time?
You don't have this. You don't have this. Initially, you don't have this. Okay, you don't have this. So meaning, as you can see, 1,000 debit is more, isn't it? More than the credit, because the credit is 0, right? So meaning this is debit balance. Debit total is more than the credit side.
Oh, okay.
So that's why we put 1,000 here in order to close it, to balance it. We put CD, so this is debit balance, and BD. Oops. And we have balance BD here. Okay? Balance BD and 1,000. So debit balance. So look at balance BD. Where is the location? If it's debit, then debit balance. Now, adjusted for balance. Okay, if the person did not ask you to do, so no need to do. But in case you are asked to do, so just remember initially you only have one item here, electricity. Okay? But then after you have done the prime entry, so electricity decreases at 5,000, you minus 1,000, so become 4,000, and we have new item, prepared electricity 1,000. So that's why you have here prepared electricity 5,000 minus 1,000 become 4,000, and follow the prime entry just now, prepared electricity 1,000. Okay. Then financial statement like what I'm explaining to you, SPL. And in SORP, so since, debit balance. So remember, that's why it's very important for you to be able to identify whether debit or credit balance. Because as you know, this is debit balance, it must be in the current asset, prepared electricity 1,000. Okay, that's why I'm checking on whether you understand debit balance or credit balance. So it's very important, huh? Okay. Okay, that is expenses. Any question? We have accrued, we have prepared.
No.
No question, huh? Okay, so we continue with accrued income. Okay, what is accrued income? Accrued income meaning revenue earned or revenue realized during the year, but not yet received. Not yet received, meaning we are talking about the cash on the revenue that is earned. We have not received yet. Okay, so meaning it's already been realized, it's already been earned, but we have not received the money yet. So that is accrued income. Now, if it's not being received money yet, so we have not recorded. So we have to do this. So look at this illustration. Commission received was 3,000 for the year ended 31st of December. So this is the year end. Commission of 500 has not been received by the year end. So meaning this is what we have received. And what we have earned altogether is 3,500 altogether. But then we only received the 3,500 we have now received. So that is why your trial balance, okay, they only record what is being received. So commission received is a credit item, is a revenue. So that's why it is on the credit side, 3,000. So how much commission received should be recorded in SPL? So we have to record as it is earned. So it's not 3,000, but instead 3,000 plus 500. So 3,005. Okay, so that is the amount that should be recorded. So that's why we need to do adjustment. So the adjustment is we have to increase a credit item. So increasing the credit item, meaning that giving us the indication commission received should be credited. So that's why commission received credited 500. So knowing this is credit, so the other entry, the corresponding entry should be debit. So we debit 500 on, okay, same name, commission, but then we put that, we put it as receivable, commission receivable, meaning commission receivable is the same meaning as accrued income. Okay, receivable, meaning it's already earned, you're gonna receive in the future. Right. So this one, SFP, SPL, you don't have to write, but this is only giving you the guidance. So commission received, you need to close off because it is a statement profit or loss item. What about SOFP? Okay, this one we have to balance off because this is statement of financial position item. Okay, and you put the narrative commission not yet received, yeah, or accrued commission. Now, in the general ledger, okay, because it's already recorded in trial balance, so you have the existing entry. Okay, that is, we have commission received, and we have the bank account, which is the bank is being debited with 3,000. It's already been recorded there. And then commission received. Okay, commission received is being credited for this amount. Okay, so in the bank account, the particular is commission received, and in commission received account, the particular will be bank. Okay, the heading of the account that is being debited in the commission received account. Right now, as we know, okay, the requirement of matching concept. So we have, this is not commission income for the year. So we have to increase the commission received. So by doing adjustment, by following this prime entry, okay, we credit commission received. That's why we credit 500 in the commission received, following this prime entry. And knowing this is credit, so the corresponding entry must be debit. So which is open up commission receivable account and record on the debit side 500. Okay, the particular in commission receivable account, we put commission receivable. In commission receivable account, we put commission received. Okay, as a particular. Then, okay, commission received is SPL item, we have to close off. So how do we close off? Because this is a credit item, so we have to make a debit entry. Debit entry and put it to SPL. Now, as we complete the double entry in SPL, okay, it should be credited, isn't it? But then we are preparing in a statement form. So credit is represented as N. So we add income, okay, and then we put commission receipt. So 3,500. Right? And then commission receivable. So this is statement of financial position item. So we have to balance off. So this is debit entry 500, isn't it? So debit is more than the credit side. The credit total is 0. So we make this figure 500 here and then put the particular as balance CD and below the total balance PD. Okay.
Sir, can we write
Yeah.
accrued commission?
Okay.
Can we write accrued commission as the title?
Or the title here can.
Yeah.
Accrued commission receipt account can.
Oh, okay.
But I mean, commission receivable also, I mean, the most suitable. But if we put accrued commission, I accept it. But better you follow according to the notes. Okay. So this one, you put as balance PD. So this is, Farah, what balance is this? Credit or debit balance?
Debit.
Yes. Okay, debit balance. Total debit 500 is more than the credit side. Okay, so meaning by knowing this a debit balance, so it should be under current asset. Okay, SOFP extract. So you put current asset, commission receivable. So that's how you illustrate. Huh? So you must put the word here, extract, statement, financial position as at 31st of December, extract, and then put current asset, commission receivable, 500. Right? Now that is accrued commission, accrued income. Any question so far?
No.
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 Right. So the next thing is income received in advance. Okay, income received in advance, meaning revenue for the following year that was not yet earned or not yet realized during the year, but received in the current year. So this is in advance. Not been earned, not been realized, but we already received it. So if we receive it, meaning we have recorded it. That's why, look at this example 4, Ali Mama prepared his half-yearly account on 30th of June. Half-yearly meaning for 6 months. So received rent on the 5th of January 2000 or January to 30th of September. So we are in January to 30th of June. But then we are receiving in advance. Okay, in advance of this rental receipt. Okay, from July, August, and September, so 3 months. So before Alibaba prepare its account on 30th of June, it must make the following adjustment for the rent received in advance. So meaning, because it's already been received, so it's already been recorded. So that is why the trial balance of Alibaba extract as at 30th of June. So you have rental receipt on the credit side, 3,000. So which is 3,000 inclusive of rental until September. So 3 months in advance. So we need to do adjustment. So how do we do adjustment? Okay, before that, you need to know how much should be for 6 months. Yeah. So how do we know? So 3,000 you have to divide because this is paid from January to September. 9 months, isn't it? So 9 months, you need to divide. So we have 3,000, 9 months divided by 9. So it should be 333.33 per month. So times 3 months in advance. Times 3 months, we have 1,000. So 1,000 is in advance. So we do adjustment. Okay, we have to reduce the income to 1 year. For 6 months. So 3,000 minus 1,000. So only 2,000 for 6 months. That is the amount. That is the objective here. We have identified how much is the amount. Now we do the adjustment. So remember, rental receipt is a credit item. How do we reduce credit item? Reducing credit item, we have to make opposite. We do a debit entry. Rent receipt, we debit 1,000. Now, knowing rental receipt is debited, so the corresponding entry must be credit. So what is the name of account that we credit? So we put rent receipt in advance. Or prepared rent receipt. Okay, whichever, yeah? Rent receipt in advance or prepared rent receipt. Now, this SPL and SOFP here, you don't have to write down, but this is only a guideline. So meaning rent receipt is a SPL item, statement of profit or loss item, and SOFP, meaning this rent receipt in advance is statement of financial position item. Okay, stating SPL we have to close off, SOFP we have to balance off. Then we make a narrative here being amount of rent received in advance. Now, in general ledger, okay, so since it's already in the trial balance, so meaning we have existing account, the bank and rental receipt account in general ledger, okay, which is rental receipt, as you know, is a credit item, isn't it? So 3,000 will be credited here. This is double entry, 2,000, and then debit the bank account. Okay, that is existing. That is what being reflected in the balance. Now we need to do adjustment because knowing, okay, we have identified 1,000 is meant for the following year. So we have to reduce a credit item according to this prime entry. We refer from this prime entry. Okay, we debit rent receipt. So this is rental receipt account, rent receipt. Okay, we debit. So 1,000 we debit it. And then we credit. Open up rental receipt in advance, 1,000. So complete double entry. Now make sure the particular in rental receipt account you write correctly. So must be according to this rental receipt in advance. And in rental receipt in advance account, okay, the particular you write down this heading rental receipt. Okay, so we have done the entry. Now we have to close off and balance off. So rental receipt account, we have to make a debit entry. Okay, first of all, to make a total line, okay, we have single line on the top and then double line underneath. It must be the same row, and 3,000 is the highest amount when we do comparison, debit and credit. We have here 1,000 debit and then credit 3,000. So use 3,000 as the highest amount as a total for both sides. In order to make the total debit in rental receipt account as 3,000, we need a balancing figure, which is the amount 2,000, which we have to transfer to, we post and close off into SPL. Okay, 2,000. And then 2,000, complete the double entry. This is debit, So in SOFP should be credit, but then we are not presenting in a ledger form, but it is in a presentation form. So that is why SPL, okay, and is representing credit entry. Income, rental received, and then put the working here, 3,000, okay, that is what being reported. You adjust minus 1,000, so only 2,000 will be taken into account as in the SPL. Okay, and then SOFP, so rental received in advance account. So we close off, okay, we put double line, and then okay, put double line also here, 1,000, and put the what do you call that? The particular as balance CD. Now, Noel, what balance is this? Debit balance or credit balance? Rental received in advance.
Credit.
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 Yes, credit balance. Very good. Credit balance, huh? So because credit is more than the debit side, 1,000. So credit balance. So CD and then BD will be the opposite. Okay. So knowing is a credit balance, so it should be current liability. So that's why in SOFP, this is SOFP. SOFP. As at 30th of June, extract. So it should be on the current liability. This one, no need to put in, no need to write down lesson. Okay. Now, important note. The item 2 to 5 above involve opening and accrued and prepared account together. The item number 2 to 5, meaning what we have here in SOFP, involve opening and accrued and prepared account together with expenses account, as well as the opening, the accrued and income and advance account together with income account when year-end adjustment are made. So this is considered the long or the two-stage method. Okay, there is also a shorter or one-stage method where only the expenses and income account are open. Okay, any accrued and prepared expenses are included either in the debit or credit side of the expenses account, depending on its nature and whether they are opening or closing balance. Similarly, accrued income and income received in advance are also included in the income account accordingly. So we have two methods, okay, dealing with the opening and closing. Because of this, what we have here, all this illustration, okay, we are opening two accounting. This is what we call two-stage method. And this is long method. Okay, that's why the item 2 to 5 involve opening the accrued, opening the prepared account together with expenses, as well as opening the accrued income in advance. Okay, this is considered long method or the two-stage method. Why we call it two-stage method? Because we have two accounts involved. One is like this one, we have rental receipt account, and the other one is rental receipt in advance. So this is two account. So two-stage method. Okay, but we have alternative one-stage method. We only open one account only. We open like this one, we open only the income account, rental receipt account, where only the expenses and income account are open, one account. Any accrued or prepared expenses are included either as a debit side or credit side, meaning we have debit balance, credit balance. That's all. One account only. So you will see in that, like what we have here. Okay, if it's expenses account, so if we have a debit opening balance, so this is prepared expenses. If we have a credit balance, so these are the possible entry that we have in expenses. This is the concept, meaning representing all the expenses. Okay, so just remember, if it's debit balance, so this is debit balance, look at BD on the debit side. If it's credit balance, we look at the BD on the credit side. So if you see an expenses account is on the debit side, so this is prepared expenses. If the opening balance is credit, then this is accrued expenses. So that is the understanding. So this is showing you what we call it, one stage method. Now, before we continue, we have a 5 minutes break. I wanted to process the information first, what we have learned just now, and then we move on to the next one.
Okay.
While having the break, can you think of what you don't understand? Yeah, the two-stage method that we have done just now. Okay, let me know. Yeah, right. 5 minutes break. Okay. But okay, opening balance. So during the current, before we proceed, do you have any question? The two-stage method is not
Need to write the
two-stage.
the formula every time we put in the
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 formula, the working,
yeah yeah
the working,
yeah
the
the
working,
working.
yes.
Okay.
The formula, there's, no need. Now, during the current year, some of the expenses incurred may not have been paid, or some expenses may have been paid in advance. So similarly, some income may still be outstanding or may have been received in advance. So that is why these balances will be carried forward. Okay, if we are using the two-stage method, you will have balance CD or balance BD to the following year. So at the beginning of the following year, these balances will be shown as balance brought forward. Okay, how do we carry forward this balance? So you have this summary. So this is the guideline. Now, when we the business make payment, of course, the expenses will be debited. So this is the debit, and then the credited account is bank. So this one is only explanation payment during the year. Okay, so if we, or what you call this balance here, CD above the total on the debit side. So this is credit balance, isn't it? So if this credit balance, accrued expenses, same as this. Okay, accrued expenses. If this debit balance like this one, balance CD above the total on the credit side, balance BD the opposite. Okay, below the total on the debit side. So this is prepared expenses. So same like this, same concept. Just, I mean, just make it easier to remember. But for income, okay, it will be different. Income, if you have a debit balance like this one, balance BD, okay, balance BD. So CD is here. Look at this. CD above the total on the credit side, and then BD, okay, like this one. So this is accrued income. What is accrued income? Income that is being earned but have not received the money yet. Okay, debit balance, accrued income. But if you see the opposite, that is credit balance on the income, so meaning this is income in advance. Okay, income in advance, meaning income that is not being earned yet, but money already has been received. So it's liability. So this is credit balance. Okay, when we receive money, when the business receive the money on income, so we debit bank and credit income account. That's why it's credit item. Okay, bank, the particular here is bank, received during the year. And when we close off, of course, this is credit item. We have to do a debit entry and then put into SPL. Okay, again, if we have debit balance, this is debit balance, meaning representing accrued income. If it's credit balance, that is representing income in advance. So prepared income. Okay, so meaning when you do the ledger account, so by now you should know how to illustrate debit balance, how to illustrate credit balance. Okay, knowing debit balance, meaning that is accrued income, previous income. knowing credit balance, so that is representing prepared income in advance. Okay, so we are going to learn how to do one stage method. So how do you know whether this question wants two-stage method or one-stage method? You look at the question. Okay, normally the question, prepare the ledger account on commission receivable. Prepare the account on commission and wages. Meaning, if they mention only the name of the income account and the name of expenses account, that is one stage method. But then, if the question was prepare commission receipt, prepare wages account, prepare accrued wages, prepare commission receivable, that is two-stage method. Can you get it? You look at the question. If the question listed, okay, do we have illustration? Is the question listed down? This one, they did not put the question. So normally you will see that. Yeah? Now, first thing, so you have to, okay, I want you to look at this illustration number one, then I'll do the answer. Okay. So I need to open a new book. Okay. So if you look at the question illustration, you have 1st of October 2016. So meaning we have to open up okay, the ledger account. So we open up a ledger account. That is the first thing, commission received. Receive account. And then I do wages account. And I have the bank account also. The bank account. Now, first thing, if you look at the question, you are given, okay, look at this one, 1st of October 2016 and 30th of September 2017. So the accounting period is not the calendar year, not same as calendar year. So meaning it's a bit difficult, but it's manageable. Okay. So, but the thing is, the accounting period is 1 year period. Opening 1st of October, closing is 30th of September 2017. So you use the date, yeah, like what I'm doing now. Okay. So first thing, we record the opening balance. Okay, what is commission receipt? Okay, first thing, commission receipt. Commission receipt is revenue. And as you can see in the question, commission receivable. The wording is commission receivable. What does it indicate to you? Is this an asset or is this liability? Tell me.
The what? The commission receipt?
Receivable.
A receivable.
Yeah, the wording there in the question, commission receivable. What is that? Is it You need to classify because this is indicating to you the opening balance. So
Oh,
you
it's
have
credit.
to classify
It's
debit
credit.
or credit balance. Sorry, asset or liability.
Credit.
Huh?
Credit.
If you say credit, then this is liability.
Yeah, yeah, liability.
No, it's not liability.
Yeah.
It is an asset. Okay. Why? How do I know this is an asset? Because of the wording, receivable. The business are receiving the money.
Receivable
Are
was
going to receive the money.
receivable was a credit.
Yeah, receivable. So just like trade receivable, an asset, isn't it? So this is an asset. So what I mean, okay, you need to record the date first. Okay, first thing, the date is 1st of October 2016. Okay, I use this format because it's much more easier for me to understand. And then I put the opening balance brought down, and then the amount is 700. Okay. Now 30th of September. Okay, I make a total line, and I remember the format that is given in the notes. So you have 30th of September 2017, and the description is still commission receivable. Again, that is indicating to me we still have debit closing balance. You understand what I'm saying? We still have debit closing balance. So 1st of October 2017. So balance brought down. Okay, this one, 30th of September 2017. Can you understand what I'm doing here? Correct? Then I record accordingly from the question. So 840. So 840. Okay, the word itself, commission receivable, tells me this is an asset. How do I know this is an asset? Okay, I remember trade receivable is an asset. The word is receivable, isn't it? So it is an asset. So I record the opening balance as debit balance because this is an asset. And I record the closing balance as a debit balance as well. So I put 840, 840. Debit. Okay. And next one is accrued wages. So because we are doing one stage method, so we only open the income account, one income account, and one wages account. So I record the wages, accrued wages. So the wording accrued, and then knowing wages is an expenses. So this is indicating to me liability opening balance. So if it's liability opening balance, so it will be like this. So balance BD, and then closing balance also credit, because it's still using the same word, accrued wages, isn't it? So 30th of September 2017, so balance CD, and then 1st of October 2017, balance brought down. And I put the figure correctly, so which is opening is 900, closing is 520. Can you get it? Do you follow?
Yes.
You understand why this commission received is debit balance? Why wages account, okay, credit balance? Because of the word accrued wages, so it's liability. Now I have recorded the opening and closing balance correctly. Then I need to read further. Now received during the year. Received during the year, meaning the bank, okay, will be debited, isn't it? 1,200. So knowing the bank is debited 1,200, the corresponding entry must be credited. So which is will be under commission received 1,200, and then the particular here should be bank, and then the bank should be commission received. Then the date. I don't know when is the date, but I just put the last date.
30th September.
Yeah, 30th of September 2017. Okay, 30th of September. So done. Then next transaction, you see wages paid during the year. Paid, bank will be credited. So this is credit. Okay, and then wages will be debit. This is credit. The corresponding entry must be debit. So the particular in the wages account will be bank. The particular in the bank account will be wages. And the date, I put the last day of the year, 30th of September. Now, after recording this, now you know commission received is income, wages is revenue, is expenses. So we have to close off. So how to close off? Okay, first thing, add this 1,002 plus 840. Okay, 04012040, isn't it? So you use the total credit 2,040 as the total for both sides. And in order to balance, in order to make the total debit as 2,040, so we have a balancing figure. 2,040 minus 700, what do we get? 1,340. So this is the amount that you are closing off and posted to as statement profit or loss at the year end, the adjustment. So this is commission received that is being earned for the year. And for wages, okay, debit total, which is 1,520, is the highest amount. So use that amount as a total for both sides. And in order to make total credit as 1,520, you minus 1,520 minus 900. How much? 620. Isn't it? So this balancing figure is the amount that we're going to close off the wages and posted to statement profit or loss. That is on 30th of September 2017. Okay, so that is why we have like this. This amount. Commission received for wages, okay, 620 to be posted to SPL. We close off and posted to SPL. And the closing balance, okay? So this is credit closing balance. Okay, credit closing balance. So this one also debit closing balance. So knowing this is debit closing balance, so it will be in the current asset. This one, knowing this is credit balance, it will be under current liability. So that's why SOFP, so we have current asset, commission receivable, 840. In current liability, okay, we have this one only, don't put less. Huh? Accrued wages. Okay, SPL. So when we close off the income, okay, we credit SPL. So credit represented as N. For expenses, we debit SPL. Debit is represented as less. Any question? Can you understand?
Yes.
Yes, huh? Okay,
Still digesting.
that's just it. Okay, try and 3 minutes. Try and look into it and then see whether you can understand.
Okay. So if the question done state the what commission accrued means it's a what single like
One stage.
single stage, yeah,
One stage method.
one stage. Oh, okay.
Just now, what we done, two-stage method.
Okay.
Okay, let's try this one, illustration number 2. So this is opening balance, and this is the payment, and then this is closing balance. So we are doing one stage method also. One stage method. Huh? So by looking at this, huh? So first thing, see this. See, we okay, we record all this what do you call it, opening and closing. Okay, so we open up electricity account. I put electricity here. Okay, I put up electricity here. So this one, I use all the possible space that we have. Right? So I put electricity down. And I put wages account. Okay. So 1st of January and 31st of December. So this one is in the same year. So we don't have much problem. Just now it's not the same as calendar year, isn't it? So we have to write the year one by one. Okay. So for this one is much more better lah. Okay. So 1st of January. Okay, you understand first this meaning. electricity not yet paid. So meaning it's liability, accrued electricity, correct? So you interpret accrued electricity is liability because you have used electricity but not yet paid. So I record the opening balance credit. Okay, so I put January the 1st and then balance BD. Then record 650. Okay, so done. This one done. Huh? And wages, accrued wages, same thing. Because of the word accrued wages, so it's liability. So I put credit balance also, January the 1st. So balance brought down 250. And then I take the closing balance. So closing balance, I put, first thing I need to draw the closing, the total line must be in the same row. So single under, upper line, and then underneath double line. And I put, you see, we have 31st of December, still same wording, electricity not yet paid. So credit balance also, credit balance, huh? So credit balance meaning, okay, to be safe, you put balance BD on the credit side. And then CD must be the opposite. Okay, this one should be December 31st. This one, January the 1st. Then I put, okay, this one done already, 850. 850, 850. And what about wages? Wages is different. Paid in advance. So paid in advance is, in advance means prepared. Prepared means the expenses is being prepared in advance, isn't it? So the wages is not being consumed yet, but the business already make payment. So this money still belongs to the business, is an asset. So asset, balance BD must be debit. Okay, closing now. So balance CD, the opposite. So December 31st. This one, January the 1st. So I put the figure 450. So 450, 450. So I do the wages and electricity. Later I show the stationery and insurance. Huh? Now, then I record during the year. Electricity paid. So meaning paid, the bank is being credited. Isn't it? Credited. So bank credited, definitely the corresponding entry, that is electricity account, should be debited. So I put 8,900 on the debit side. In particular here, I put bank. And when, I don't know, I just put the last day of the month, the last day of the year. Okay, so done, this one. Wages payment. Wages payment also the same thing. It will be paid by check, isn't it? So credit bank and debit wages. So debit 5,750. So I put particular bank. When? I put December 31st. Now, can you understand that? Then I want to close it off. So how do I close it off? So for electricity, so which one is the highest total? Debit total is more. So which is 8,900 plus 850. So you have 9,750. So I use that total, 9,750, as a total for both sides. And in order to make credit total as 9,750, I minus 9,750 minus 650. So you have a balancing figure, 9,100. So this is the amount that you need to close off and put into SPL. So at the last day of the year, December 31st. Okay. And then what about wages? So now wages, okay, 5,750 is the total, highest total. So use that amount as a total for both sides. And in order to make total credit as 5,750, you minus 5,750 minus 250 minus 450. So we have a balancing figure here, which is 5,050. Okay, this one definitely the amount that is being posted to SPL. We close off the wages account and put into SPL. So at the last day of the year, December 31st. Okay, so that resulting what we have here, electricity account, all this entry. Okay, so this one accrued electricity, you don't have to write. This one is only explanation. But if you want to write, also can, just to giving yourself assurance, can. But there's no point. Yeah, as long as you put. If you put accrued electricity, it's wrong. I mean, it's wrong. It should be balance BD, balance BD. So this one is only explanation. Okay. You see, in SPL, knowing this electricity is 9,100. So when we put into SPL, okay, electricity 9,100, wages 5,050, and knowing wages is a debit balance, so you will be under current asset, prepared wages, 450. Okay, knowing electricity, okay, credit balance, so you will be under current liability, accrued electricity, 850. Okay. Now another thing, let me show the other two accounts. Okay, so I open up stationery. Then insurance. Okay. Then I record the opening balance, stock of stationery. Okay, the word itself, stock, okay, that is giving me indication this is an asset. So when I record the opening balance, it will be, okay, debit balance. Yeah. So I put balance BD, okay, 800. And the date I put 1st of January. And prepared insurance. So knowing the word insurance is an expenses and this is prepared, so meaning expenses that is paid in advance. So this is an asset as well. So your opening balance also debit 300. Okay, and then we make a total line. It must be in the same row. Okay, single on the top, double underneath. Then look at closing. Stock of stationery, still the same word. So meaning indicating an asset. So you will have a debit closing balance. BD, balance CD. Okay, this one 31st of December, this one January the 1st. Okay, I put the value as 350. 350. And insurance not yet paid. You know insurance is an expenses and it is not yet paid. So become liability, isn't it? It's different from this one, prepaid insurance. You know insurance is an expenses and it is paid in advance. So it's an asset. So you will have credit closing balance BD on the credit side, CD above the total on the opposite side. Then I put 150. Okay. Then I record during the year. So stationery, a purchase of stationery, 3,200. So meaning the bank is being credited. Okay, stationery is being debited, 3,200. Knowing the bank is being credited, so the corresponding entry must be debit. So that's how we interpret the double entry for stationery. So I put here bank. Next one, payment of insurance. Same thing. We credit bank, so corresponding entry must be debit. So 1,800. So bank. So far, are you following? Can you understand?
Yes.
Yeah.
Yes. Huh? Okay. Then you want to close off. Okay, closing off. So you need to select the total for both sides. So 800 plus 3,200 is 4,000. Okay, for stationery. So write down 4,000. Use the 4,000 as a total for both sides. And in order to make the total credit as 4,000, so you have a balancing figure 4,000 minus 350. So you have a balancing figure of 3,650. So this is the amount of stationery that is being closed off and put into SPL at the last day of the year. Okay, and then insurance. So debit total. Okay, you plus 300 plus 1,008. Okay, plus 150. So what is the total? We have 2,250. So use 2,250 as a total for both sides. Okay, in order to make the total on the credit side 2,250, so you must put 2,250 because there's none, isn't it? So 2,250 minus 0 is 2,250. So this is the amount that you need to close off. Okay, put into statement profit or loss. Okay, at the last day of the year. So that is why SPL, look at this figure. So if you look at your SPL, this is the amount of the stationery, and this is the amount of insurance. Okay, so stationery 3,650, insurance 2,250. Then in SOFP, okay, you will have prepared stationery 350, and you have accrued insurance because credit balance, isn't it? So credit balance, so it should be current liability. Now, any question?
No for me.
None from you, Bharat. Can you understand, Bharat?
Yes.
Yeah, that's good. And now is week 5. Let me check. I will inform you when is the test 2.
Okay.
Either week 6 or week 7. I'm not so sure. What about you, Kelvin? Do you have any question?
No, but I still trying to digest the information this chapter. I still not that good at separating debit and credit.
You still unable to identify how to determine debit balance or credit balance?
Yeah, still not that good at it. I think.
Now the debit balance, can you understand now? The BD, look at the location balance brought down. Don't look at the balance carried down. But it must be the opposite, huh? Cannot be the same sign.
Okay.
Okay, and then you need to understand, like when you select the total figure that you need to write down in the total line, so you need to select the highest, isn't it? Yeah, the highest. So use the highest. So meaning, if debit is the highest total that you taken the total from the debit, definitely it will be debit balance. Debit total is more than the credit sign.
Always more than the debit.
Not always. You have to look at the situation. Like credit item, of course, credit total always more than the debit side. Credit item like revenue, we have liability, equity. This is credit item, isn't it? So credit total is always more. But for debit item, like expenses, asset, debit total is always more. So the conclusion is increasing the item is always more than decreasing. So that's why, because credit item we record on the increase, we record on the credit side, isn't it? Like liability, equity, and income.
Okay.
Okay. So supposed to be we cover a little bit about the. Can we have how many more minutes? 7 minutes, huh? So can we just continue with our discussion on this one?
Okay.
Okay.
This one, huh? So recording inventory in the ledger. So remember, when we record the inventory in the ledger, so we need source document. And what are the source document? We have purchases invoice, sales invoice, credit notes. Yeah, that is the source document. And we need to record in the inventory card. So the inventory card is the one that we are preparing in perpetual method. That is also known as bean card or stock card. So the first in, first out weighted average. That is the one that's going to be asked in the exam normally. And we need to determine the total amount of closing inventory. Okay, and then after that, we need to do the posting to the general ledger at the end of the accounting period. Now, when we do the posting to general ledger, okay, because we need to do stock taking. Stock taking meaning we have to count one by one of the item, and then once we get the figure, then we record into the books. So what is the prime entry? Okay, the prime entry will be the general journal. So remember, the meaning of inventory is the remaining good that is in hand, isn't it? So the level of inventory as a result of this, because inventory is an asset. So if we have counted, and then meaning the inventory increase, isn't it? So that's why we debit inventory. Okay, because it's an asset. So we debit inventory, and there must be a credit account. So the corresponding account must be credited. So where do we credit? So we credit in the SPL. So that's why in SPL, so closing inventory, in SPL is supposed to be, the closing inventory is supposed to be together with sales, because it is credit side, isn't it? So like what I've said to you, SPL debit will be the expenses, credit side will be the revenue, isn't it? If it's in a T account, but we don't see T account in SPL. We are only seeing it in the presentation form. We have add and we have less. Yeah, so it should be under add, but then since it is related with cost of sales, so that's why you have presented this separately. That is, cost of sales, the formula is opening inventory plus purchases less closing inventory, isn't it? Look at the symbol, opening inventory plus purchases less closing inventory. So that, because why, that explains why it is less. It is less because it is a revenue, but then it is presented together with cost of sales. So therefore, we change the symbol, become less. So that explains the general journal here. We debit inventory, we credit statement profit or loss. So closing inventory transferred to statement of profit or loss for the year ended 31st of December. So in the general ledger, you will see like this, okay? Inventory. So you have debited because after you do stock counting, and then this is the name of account that is being credited, SPL. Then since this is an asset, so we have to close off. So that's why CD will be debit balance. This is debit balance. CD, BD on the debit side. Okay, so closing inventory do not appear in the trial balance because it is posted to general ledger after completing the trial balance. Okay, because after we complete the trial balance, then we do the stock counting. So that's why it is not attached in the trial balance. So the closing balance in the inventory account is carried as current asset in the statement of financial position. Okay, bring forward the balance in the inventory account as opening inventory in the next accounting period. So we have, you see, this is your closing balance. Then opening balance is like this for the following period. This is 2016, let's say January the 1st, 2017. So this is the opening balance. Okay, opening inventory is carried in the trial balance as at 31st of December 2012 because the year-end posting has not yet been done. So meaning only opening inventory appear in the trial balance, but closing inventory does not appear in the trial balance. Okay. You try and read first. Try and read first, and then let me know during the next class. Right?
Okay.
So yeah, we have 1 more minute. Okay,
Okay.
so that's all for today. So I'll see you on Thursday.
Okay, sir. Thank you.
Okay, sir.
All right. Bye.
Hello. So how was your last Friday test? Kevin, did you have enough time? Cannot finish third question, waste too much time. Yeah, lor, Kelvin. I see you did not finish your question 3.
Yeah, sorry, miss. The first question, I see no date. I confused. I stuck a bit. No date, impossible. I just double check.
Never mind. No date is okay. Not necessary. You need to put the date.
Yeah, sorry. I think I waste too much time trying to figure out like, why this happened, why that happened. Yeah.
I think you have to. You have to, because after first test, like I found out. I think from the answer wise, I think maybe Noel okay. Okay, later on I show you the answer. So for today's tutorial, because see like a lot of question, right? So I will pick a longest one, question 4, and then the rest you all have to submit. Yeah, have to do. I think inventory is a very important chapter for exam. Yeah. So have to master the table, the first in, first out, the weighted average table. Yeah, this one, right, must use Excel. Yeah. So going to look at question 4, and then later on I'll show you your test answer. Actually, I already finished marking. So 3 of you, Farah not here yet. 3 of you, I think Kelvin, you got 42 out of, no, it's 22, no, 21 out of 50. So it's considered fair. Noel get 38.5, I think, out of 50. Farah is 20 out of 50. Yeah, so I think you have to really, know your stuff, or else, later you fail final exam, how? The final exam is 4 questions, 2 hours. So meaning you really have to be quite fast. Yeah, have to really quite fast. Yeah, really quite fast. Or else later cannot finish. Cannot finish your question. And because you are a degree student, so the question they test you, the question they put it will not be very direct. It will be slightly, twist and turn a little bit. Yeah. And then Kevin, I think question 1 you also not really sure the double entry. Actually, the answer is actually quite straightforward. Yeah. So yeah. So that's why, right, for accounting, for accounting, when I was in secondary school that time, right, because we first 3 years what we learn general, and then from 4th year onwards we have to decide, whether you want to do science or you want to do commerce. So I actually pick commerce. So commerce is bookkeeping is a compulsory subject. So our that time, this our bookkeeping lecturer, she's very how to say, she always asks us to time ourselves at home. Like this question, you only allow yourself 30 minutes. So if you put, every time when we do homework, we have to put a clock in front of us, to time us. So make sure within 30 minutes we are able to finish. Yeah, if cannot, right, then you have to practice until you can achieve that. Or else in exam you don't have enough time. Yeah. Farah, you are here. Farah, did you do revision? I find that your answer, especially question 3, I think question 3, both Kelvin and Farah actually wasted the, because I think question 3 is the easiest one because you only do recording. But if you never done any question and if you did not do revision, I don't think you know how to do lah. Like Farah did not even put down, like, we have purchases journal, sales journal, right? The question say return outwards. Yeah, Farah, you didn't even know what journal you have to prepare, and your answer is, like you go according to the customer or according to the supplier, which is actually wrong. So that's why question 3 has a lot of marks. So some of you actually wasted on question 3. So that's why ended up the total, your total mark is actually, actually fail. So Farah got 20 out of 50. So it's actually considered fail. But okay lah, your fail is fail, but not so bad lah. So you have another test 2. So your test 2, you really have to work hard already. Now, you know how we calculate our you know, the at the end of the day, right? You have 50% coursework, 50% final exam, right? So final exam, during final exam, you must score at least 40 out of 100. If you score below 40, no matter how high is your coursework, is considered fail. This one you have to remember. Now, if let's say, if you want to make sure that you know, you're quite, make sure that you have a higher chances of pass, right? Your coursework mark should be 60% at least. You know, your coursework mark should be at least 60 marks out of 100. Yeah, at least 60 out of 100. Okay, then the chances of you pass the subject is actually quite high. You know why I say 60? Okay, for example, like if let's say final exam you didn't do very well, but at least you get 40. You see, if your coursework you have 60 plus 40, right? Because we take 50% coursework, 50% test. So if you get 60 half is 30, plus your final exam 40 half is 20, so it's 50 out of 100. So actually you pass already. So you understand my point? So your coursework at least you should get 60. Yeah. So now like, okay, Kelvin, you got 22 out of 50, and Farah got 20 out of 50. So you go and calculate how many marks do you need to get for test 2 so that you are able to reach 60. So that you're able to reach 60. You get what I mean? So meaning your test 2, you have to really work hard already.
I need to get 40 so high.
Yeah. So when I look at your answer, actually both of you wasted the question 3. Actually, question 3 is the easiest one. Question 3, you just do recording. Kelvin is okay for journal, but not enough time to do lecture. So lecture, lecture there also got marks. But question 2, I think question 2 carries the most mark, is it? I can't
I
remember.
think so.
Yeah, I think
I
question
forgot.
2.
Yeah.
But Farah, you got to work a little bit harder because when look at your actually by right, all of you can pass. But question 3, the problem is actually question 3. Okay, so
Okay.
so have to work hard from today onward. Please hand in your homework every week. Farah, you're already behind. Don't know how many weeks already, so you better hurry up.
Yeah. Okay.
Well, like I told you, accounting is like maths. You don't do, you don't know what's going on. You must do, no choice. You want to pass, you have to do. If you don't want to do, well, I also don't know what to say. And question 2, the problem is even Nora also didn't notice. Do you know that question 2 there's actually opening balance? None of you actually put the opening balance. They actually lose quite a lot of marks because there are quite a number of accounts actually with opening balance. So if you go back to really look at your question, because you are a degree student, so the question, even though your first time doing accounting, but because you're a degree student, they expect you to have a higher level of understanding and analytic skill, right? So the question that they test you is not going to be very direct. So please read very, very carefully. Time management. Read carefully, okay? Then you decide, or else you keep changing your answer, so you're actually wasting a lot of time. This is the technique having exams like that one. Right? Okay. So, well, first
Miss,
time, yeah.
the test got
Mm.
any markings? I mean, like any corrections?
Got. Yeah.
Okay.
Later you want, I can share with you the answer. But later you have time, I want to show you the answer. Then you look, then you take out your answer and then you check. So you know already. Then you know. Right, because you still keep your soft copy, right? Yeah, I'm not going to return the soft copy that I marked, so you can actually see. You take your soft copy and you look at my answer. All right, then you know. Okay. Right. So now we're going to start. Okay, tutorial 8 is about inventory. Now, this inventory, right? I don't know about IT student, but accounting student, right? If they have this question, normally they can score very high marks. Normally they can score very, very high marks. Okay, so I want to show you both methods, so I do question 4. So the rest of the question, please do on your own. Yeah. Right. If you need any help, actually, just now I already did question 1. Yeah, question 1 actually there's no working, so I did question 1. I did question 2. I have the full answer. Question 2, I have full answer, and then question 3, yeah, I have full answer. But I want to show you question 4. I find that question 4 is the longest one, and in exam, if they want to test you, they might test you question 4. Yeah, question 4 is actually 2 methods. So in your lecture, you have 2 methods, right? First in, first out, and weighted average, correct? Yes. First in, first out, and weighted average, right? Okay, so first in, first out is actually okay, accounting in accounting, we have accounting standard. So for inventory, there's one accounting standard. It's actually MFRS 102. Yeah, there's a number one. So it's about inventory. So this accounting standard all talk about inventory. So the approved methods are 2. First in, first out, and weighted average. So of course today I'm not going to teach you, not going to talk about the theory part lah, okay. And we only want you to do the calculation, which is considered the easiest one and the lowest level, so that you understand. So when you do the calculation, you have to really understand what do you mean by first in, first out. So first in, first out means what? Those that you receive first, you're going to sell first, right? You put in sequence now. Okay, I receive this one first, I sell first. I receive this one later, I sell later. Yeah, so that is first in, first out. But weighted average is slightly complicated. Why? Because whenever you buy new one, whenever you have new stock, you revise your inventory price. Yeah. You buy new one, you revise your price. You buy new one, you revise your price, right? But actually it's not difficult. You just have to have the know the technique, and then it should be all right. Okay, so question 4. So I straight away go to question 4. Yeah. Okay, now question 4, what they ask you, you see, normally inventory, the question is very short, but the answer can be very long. So question 4, your question is very short now. A, B, C. Okay. A is what? Calculate Lorenzo's gross profit on his sales of unleaded petrol for the month ended 31st May. So we are talking about in the month of May. And he values her inventory on a first in, first out. Yeah, okay. And then they ask you, so okay, anyway, one question they ask you to do 2 methods. One is first in, first out, one is weighted average. So later on we'll see what is the difference. And part C asks Lorenzo expect the cost of petrol to continue rising. So in 4 weeks' time, at the end of June, he expects the unleaded petrol tank to be full. So which inventory valuation method will give him the higher profit for this period? Yeah. Which one will give you a higher profit? So this one you got to calculate. Yeah. Now, the higher the closing stock, the higher will be the net profit. Isn't that correct? Yeah. So this one later on, when you do the calculation, then you can see. Okay, so Lorenzo runs a workshop, okay, which sells several grades of petrol. So on 30th April 2018, the tank containing unleaded petrol was empty. Set out below are the records for receipt and sales of unleaded petrol during May 2018. Now, when you read this question, is there any opening stock for month of May? Do you have any opening stock for the month of May? Yeah. Any opening stock for month of May?
No, it's empty load petrol there.
Yeah, no. Yes, correct. Actually, no. All right. So from now onwards, right, whenever you do question like this, please be careful. Please check on whether you have any opening stock or not. Yeah, okay. Very, very important. Must check whether you have the opening stock or not. Or else later on, if you miss the opening stock, then it will affect your number. Just like in your test, the question 2. Question 2 is actually, that's the problem. Yeah, actually, none of you actually realize that there's an opening value. So if you did not put the opening, then at the end, your closing balance will not be correct. Right? Okay. Now, so I am going to use the table like this. Okay. So this one got to make it a bit smaller. A little bit smaller so that you can see. Yeah. Okay, the best thing is you can do together with me, then, right, then it's, yeah, okay. All right, so I make it like this so you can see. Okay, now, so this is the template that I actually use. So basically for this question, there's no opening stock, right? There's no opening. So if there's no opening, then we start from 1st May, correct? Okay, 1st May. Now you can see this is purchase itself. So okay, normally of course we purchase first, then only you can sell. If you don't inventory, you cannot sell, right? Okay, so 1st May, what we have is we purchase. Now you see here, receive means purchase lor. Yeah, okay, receive means purchase. Yeah, okay, so I put here, right, receive means purchase, and issue means sell, okay, yeah, right, okay, now. So 1st May, we received 75,000 liter, right? So I put 75. Yeah, I don't want to carry the 30. The 30 is actually I put on top here because I don't want to type too many zero. Yeah, so actually you can do like this for all the units. So in this case, then we have all space. So I hope you can see the whole thing. Right, okay, like this. Yeah. So I just put 75. Right, in 1st May, you just put 75. Yeah. Okay. Now 75, and then what is the price? 0.5, is it correct? 0.5. So in this case, right, how much you get in total? So you can find the total. So you want to find the total, meaning I purchased 75,000 liter, okay, 50 cents per liter. So how much is the total? So I will set a formula to help me. So I put this one times this one, correct? Yes, enter. So this is my price now, 337.5. So meaning it's actually 37,500. Here also I should put the, right, okay, so I should put the 30 here. So add up, okay, take up more space. Okay, I just do one, so apply to all. Right, so this is what we receive. Okay, and then here, 1 week. After 1 week, within this week, we actually sold this much. Okay, so what I put is I put 7 May. Okay, I put 7 May. Okay, I put 7 May. How many liters sold? Okay, 67.5, right? Okay, is the price is okay now. This one is your selling price, but in here, when you control your inventory, you don't put your selling price. Yeah, you don't put your selling price. So 50 cents, right? So we assume we also issue at 50 cents. Okay, this is to check how many liter left at the end of the month. Yeah. Okay. Yeah. Now, meaning you have to put at cost. At cost means you use your purchase price, right? Okay, so we already sell 67.5 liter. So again, how much is this? So this one times this one, right? Okay, so this is your, okay, this is how much we already issue out, right? Okay, and then followed by 8th of May. Okay, 8th of May, so meaning we actually, restock every once a week. So 75 again, right? 8th of May. Okay, but this round is 52 cents. Okay, so 52 cents. This one already have formula, so I just copy right? Okay, so this is the value. Okay, and then the other week, so I put 14. So I issue, okay, in total I issue 75, right? Okay, now this one this one you got to be careful. Oh, I forgot to do the balance. Okay, here, okay, every day you got to fill up the balance up. Now for this one, the balance is actually the same, correct? So just put here, the balance is the same. Okay, and then after I issue, so this one, how much is my balance? I have sold 75, I sold 67.5, so the remaining would be, so 75, right, at first minus this unit, right, okay, and then this one is also 50 cents, okay, so this one we can actually copy the formula, so left this much, yeah, the value, correct? Right, so left 7.5, left 7,500 liter, right? Correct. Okay, then on the 8th, we purchase some more, right? We continue to purchase, right? Okay, so here, right here, okay, then we need to, okay, actually this one is to draw the line now. This one is on first May. Okay, on first May, okay, on first May, okay. Oh, yeah. On first May, right? And then this one is after 1 week. Okay, this is our balance, right? Okay, then because you see, because the price is different now, you see, in the second week, right, our purchase price is 52 cents. Well, so we don't confuse it. So what we do is, because I want to know, okay, my first week I still have this remain, right? Okay, remain this one, and then right in week 2 I actually buy. In week 2 I actually buy, correct? I actually buy new one. So when I buy new one, yeah, and then after week 2, after week 1, I left 7.5. Then I buy new one, but because the price is different, so I cannot 7.5 plus the new one that I bought. Cannot. Why? Because the price is different. See, the price is actually different. Yeah. All right. Okay. So what I do is my remaining I put here, and then I put what I have bought. Okay, I bought this one. Correct? Yes, I bought this one. All right. So I put here. This is what I actually bought. Okay, I bought this one, so I put it here. Correct? So meaning what remained from week 1 and what I bought in week 2. Okay, then I total up. Okay, I total up. Yeah, okay, you can total also can, you don't want also can. Okay, put like this. Now, actually, this one I got to move. Okay, this one I got to move one row down. Okay. Right. Okay, so this one don't want. Yeah, so like this. Okay. Yeah, I think I better don't put the question so I can see. Yeah, this way you can see bigger. Okay, like this, right? So you see, this one I use up. Okay, to make the line. Okay, is correct. Yeah, so you can see day by day. Okay, right. Right now, and then on the 14th, the second week, we issue some more, right? But according to the question, second week we issue 75, right? 75,000. Okay, so now when second week when I issue 75, yeah, so you have to be careful lah. Now, first in, first out, meaning you must utilize the old one first, right? So meaning here you have to put 7.5, correct? Yes, you have to put your 7.5 here. 7.5 is at okay. So meaning you have to use up all this one, correct? You use up all here. Okay. I issue the old one first, right? I issue the old one first. Yeah. The old one all out. Right. Hey, why cannot? Okay. The old one all out, right? Correct. Yes. The old one I issue out first. Okay. And then later on, now the question here in total we issue how many? 75, right? 75. So meaning you take 7.5, then anyway, here in total is 75. So meaning here you issue how many liter? 75 minus 7.5. So meaning here is 67.5. So these two parts together will equal to 75, right? Okay, so actually we can do one more like this lah. Okay, so in total, the question said we issue 75, correct? Yes, but because of first in, first out, we need to utilize the old one first. So the old one put here, and then the remaining, we only take 67.5, right? Okay, remaining only take 67.5. So 7.5 already issued out. Okay, 75 minus 67.5 is left how much? 67.5. So left 7.5, correct? Yeah, it's okay. So here we actually left 7.5. Agree, you know? And this 7.5 is at how much? How much per liter? 50 cents or 50 cents or 52?
50 cents.
Why is 50 cents?
Because the first in, first out logic, right?
First out logic, why is still 50 cents?
Oh, the first in is it not 50, and then we sell it out, it's not
Yeah
50.
lah, but we already sold,
Oh, you already sold the fish.
Yeah, you say first in, first out, right? First in, first out, this is the remaining from week one, right? Correct. From week one, remaining from week one, and we bought new one. Agree? And then now, and then now in week two, in total, we sold 75. But because of first in, first out, we have to sell the 7.5 first, right? Isn't it? Okay. Then this 7.5 all sold out already.
Oh.
Then we take from the next 75, right?
Also, we need to do two things.
Yeah. So meaning, so this one is 0.52 already, correct? So what is your remaining? The remaining is how much? So you see, you get what I mean, no? In total, in week two, in total, we sell 75. But because of first in, first out, we have to utilize the remaining from year one, the week one. Is that correct? Week one still have 7.5. So this 7.5 must out first. And then we get from the next 75. But the next 75 is 52 cents already. Correct? Yeah. Correct. So now the remaining is 7.5. Correct? So how much is this? What is the price? The remaining 7.5, how much is the price?
0.52.
Yes, 0.52. Okay. So now the remaining is 7.52. Yeah. Understand or not? So this is what we call first in, first out. So you see, when you do this thing, you have to be very alert on. Right? Okay, so in total is 7.5. Okay, so this is 14 May. Okay, next we go to week 3. So week 3 will be 15 May. Yeah, okay. Week 3, how much we actually purchase? Week 3, we purchase 60. Correct? Yeah, okay, 60. And then, this one becomes 54 cents. Yeah, going up. Okay, going up, right? Okay, and then now we need to record the balance now. From here, you have any balance? From your week 2, we have balance, right? Correct? This balance you're going to bring down. Okay, so bring down this balance. Okay, we bring down this balance and we plus our new purchase. Correct? We plus our new purchase. Yeah. So this is our new purchase, isn't it? Correct? Yeah. So we plus our new purchase. Now, because the price is different, so we record separately. Correct? We record separately because the price is different, so we record separately. So this is what happened, after the purchase in week 3, right? Okay, so we draw like this. Okay, then followed by we actually issue, right? So let's say I put 21st. I put the end of week 3. Okay, the end of week 3, according to the question, we issue 45. Okay, we issue 45. So meaning in total here is 45. Yeah, okay. In total here is 45. In total here is 45. So now first in, first out again, right? First in, first out meaning we need to utilize this one first, correct? Yes. So we have to take this one and use up all this first. First in, first out, right? We use up all this first. Isn't it? Okay, we use up this first. Okay, then in total we sell 45. So this one will be 60 minus because here we take already, here we have 60, so but we only 45 minus 7.5, right? 45 minus 7. So here is 37.5. In total it gives you 45. Right? Okay, so this 37.5 is actually from this batch, but this batch the price is 0.54. Yeah, okay, 0.54. All right, okay, then how much is the remaining? Remain how much? Anyone? Remain how many units? How many units remain?
37.5.
37.5. Okay, so how do you calculate that? So meaning 60 minus 37.5, correct? Are you sure? How much remain?
22.5.
Yes, 22.5. Right? Okay, 22 0.5 and the price is 54 cents. Isn't it correct? Yeah. Okay. So you have to be very alert. So you see, you use up because of first in, first out, right? Because of first in, first out. So you use up, yeah, because of first in, first out. So you use up first. After you use up, okay, then then you take from the next page, right? So the remaining is this one, isn't it? Correct? Yeah. The remaining will become, the remaining is actually this much now. 22.5, right? Okay, so this is considered 1 week. Okay, 1 week like this. Put like this.
Oh.
Yeah, right? Can you see? Can you see the thing? So please do your homework. Yeah, this question is very, very important for exam. I think it's quite sure that you get question like this, so you have to practice. When you see me, so now if you understand how I do it, please practice until you get the right answer. Okay, then the week 4. Okay, week 4, 22nd May, how many units we buy? 60, right? Okay, and the price is 0.56. Yeah. Yeah, so you see the price keep increasing. Okay, like this. Right, okay, then we need to fill up here. Now, you see, from week 3, remaining is this one, right? Okay, so put here. Okay, carry forward to here. Okay, then we add up how much we bought. Yeah, we add up how much we bought. Then we add up how much we bought. Okay, so we bought this, right? Can ready? Yes. Okay, so this is 1. I put it in the wrong. See, I in the wrong. Okay. Yeah. All right. Okay. So this is purchase. Okay. The line. And now we look at the 28. Okay. The 4th week. So 4 weeks. Okay. 4 weeks. So in week 4 we issue this much 0.5. Okay. Okay. Now no, I shouldn't put like this. Total. Okay. Oh. My total issue, okay, my total issue is 37.5, correct? Yeah, total issue, okay? In total, we issue 37.5. So now you got to be careful lah. So but then you see, you have remaining, right? Okay, you must utilize the old one first. Okay, so the old one is here. Carry this one down, right? Okay, use the old one first at 54 cents. Okay, then how many units you're going to take from 56 cents? Because 54 cents all issue already, right? Correct? Use up. So how many do we need to have it here?
37.5.
Huh? 27.5? Why?
15.
15. Yes, answer is 15. Because these two goes together, right? Because in total it's 37.5 only, right? So you take this one, and then you use first in, first out, right? Okay, first in, first out. So you take this one here. Okay. Then, but in total 37. So meaning how many units you need to take from the batch of 56 cents? How many units? So the difference, 15, correct? 60. Out of 60 here, we take 15. So after we take 15, this here remain how many units? Out of 60, we take 15. Here remain how many units? Hmm.
45.
45, yes. 45 and okay. This. Yeah. So anybody actually confused? But you actually keep track, meaning you keep track on your units, you see? How many you buy it plus.
Sometimes they remain still two of them, right? Since sometimes you get not enough to exhaust the first supply.
Yeah. So of course, you see, like in total 37. So not, of course, from the old one not enough. Then you take from new one. As long as you have to utilize your old one first. Always utilize your old one, then you move to the new one. Yeah, all right. Okay, so like this lah. So this is your remaining right? Okay, draw a line like this. So is it clear? Clear or not? So your answer like this correct? Yeah.
Yeah.
Okay. Then of course we can actually calculate now, huh? We can actually calculate how much is our total purchases. Our total purchases is actually from here. Okay. Draw. How much is my total purchases? Okay, you can actually see from here. What is okay? See, okay, how much is my total purchases? Total purchases is basically you add up this column, right? You add them up. Isn't it? Total purchases in value. So what I do is, okay, this add up. Okay, add, yeah, right. So this is my total purchases, 142,500. Yeah, right, 142,500. And how much I thought in total, how much have I issued? Okay, so this one again. Also, okay, just copy it on here. Okay, so total issue is, oh, not correct. You know why? Miss out this one. 0.56. This one did not go, so that's why. Okay, so total issue is this much. Okay, total issue becomes this much. Okay, then here, how much is your remaining stock? This is my remaining. This is my closing stock. This is actually my closing. Yeah, so this is the closing stock. Okay, this is my closing stock. Okay, I know my closing stock. I have 45,000 liter. 45,000 liter at 25,200. Okay, so you see this table is actually, they will actually tell you how much your total purchases, and this is actually your cost of goods sold, and this is actually like when you issue at cost price, how much altogether, and this is the remaining, your closing stock. So we still remain 45,000 liter at 56 cents per liter. So in total is 25,200 remain. This is our closing stock. Okay, this is our closing stock. Right? So do you have any question? Can you actually see how it actually works? So always remember first in, first out. And because the price is different, so we put it separately like this. Okay, we put it separately like this. Okay, now next we need to do a weighted average. Okay, weighted average. Okay, weighted average is, so this is the closing stock, right? So put here. Okay, so this is closing stock. Okay, now weighted average. Okay, I use back the same table. Use back the same table. Okay, put here. Okay, I use the same table. Now, weighted average is slightly different. This one is slightly different practice. Right, now weighted average is, okay, the same thing, same question, right? So same question, so we start from 1st May also. Yeah, okay. So 1st May, this one actually we can copy from here. Yeah, I can copy the whole thing actually. Right. Okay, yeah, first day. Right, okay. Then we move on to on the 7th, week 1. At the end of week 1, we issue 67.5 actually. Yeah, we issue 67.5. Okay, now this is weighted average. So you look at your balance. Your balance at the moment we only have 50 cents one, right? Okay, so we issue at 50 cents. Okay, issue at 50 cents. Then times. Okay, so now how much left? How much left? How much left?
7.5.
Yes, 7.5. 7.5 liter, right? At 50 cents. Is it? Yeah. Okay. At 50 cents. All right. So okay. So this is the end of week one, okay. End of week one. So I just draw the line. So end of week one. Okay. Then we move on to week two. Week two is ahead of me. So week two we further purchase. Okay, another 75. Okay, another 75 like this. Yeah, right. And then okay, now week two when we purchase it becomes 0.52. It becomes 0.52. And so the total is this one, correct? Okay, then I would like to calculate my balance. So tell me, how much is the balance? How much in total? We have here we remain 7.5. How much is the total?
80, 84.8, 84.5. No.
84.5?
No, 80, 82.5.
82.5. Yes, correct. Yeah. How do you get 82.5?
You just plus us, but and the answer you need to put them separately.
Yeah. So meaning the remaining plus the new one that you purchased. The remaining plus the new one that you purchased. So meaning here it will be equal to what left from week one plus what I have purchased. Right? Make sense? Okay. Yeah. Now how about the price? You see the price, the remaining from week one is 50 cents, but this one is 52. Since our method is weighted average, okay, weighted average. So meaning whenever we have new purchase, we must revise the price per unit, correct? Yeah. Okay, so this one you leave it here first. Then you know the total, right? Okay, so the total here will be this one plus this one, isn't it? Correct? Yes. Okay, you put the total. So meaning now my total is 42.75. So can you tell how much per liter? Can you tell how much per liter? So if you want to get the price, it would be your total value divided by how many units that you have. Okay. So it's this answer. Yeah. It's actually this answer. So this is what we call weighted average. This is what we call weighted average. So meaning the remaining is 3.75 plus the new one, okay, 39, and then divided by how many liter? How many liter in total? Yeah, how many liter in total? All right, okay, so.
What decimal so big?
Yeah. So, okay, if you want your answer to be accurate, you keep the decimal, okay. Now, of course, in the exam, keep decimal is very mafan, right? Well, you can actually round up to 2 digits. Now, this one, if I round up, it will be 0.52. It will be 0.52. Okay, let's say I don't want to round up. Okay, then on the 15, right? Okay. On the 15th May, we actually issue how many? 75, right? 75, right? Okay, so now, since you issue 70, okay, when we issue 75, you issue at this price, the latest price that you get. Always use the latest price that you get, right? Okay, so my latest price will be this line. 818, correct? Okay, so how much is this? So I calculate, it will be this one times this one. Yeah, right? Okay, so this is the value. Okay, then how much is the remaining? After I issue 75,000, what is my remaining?
7.5.
Yeah. Okay, so my remaining is 7.5, right? Okay. Price is still the same price, okay? Because this is an issue, when you have new one, you got to revise. Okay, so the price is still the same, right? Okay, now, so again, if you want to be accurate, what I normally do is I take this one minus this one. That's it. Your total minus how much you issue, the remaining is actually your balance. So this is my number. Okay, yeah, this is my number. Now, if let's say if you change this to 0.52, your number will be totally different. Yeah, all right, your number will be totally different. Okay, so this is at the end of week 2, correct? At the end of week 2. All right, at the end of week 2. Yeah, okay, then we go to week 3. So week 3 will be this one I put 7 oh 14. Okay, so then we go to 15. Okay, yeah. Then okay, so this one I put 15 May, isn't it? Yeah, right. Okay, so 15 May. 15 May I purchased, okay, I purchased 60, correct? And this is at the price of 0.54. Okay, so again I calculate my total. So one times this one, right? Okay. Now, then I need to calculate my balance, right? Okay, yeah, I need to calculate my balance. So my balance is, I have a balance of 7.5, correct? Right? So this one, so I got it. Okay. So I got a balance of 7.5, right? Okay, and then I have new purchase. So 7.5 plus 60. Yeah. So ended up I will have 7.5, correct? Yes, 7.5, the remaining plus my new purchase. So I have 67.5, right? Okay, how about the price? Okay, the price per unit, never mind first. So we actually take the total. So this total plus my new purchase total, correct? Yeah, my remaining plus my new purchase. Okay, then here, so how you're going to do it is this one divided by your total units that you have. So, okay, this is my per unit price. Can you understand? This is what we call weighted average. Yeah. All right. So when I have new purchase, every time when I have new purchase, I'm going to revise this price. Right?
Oh,
Okay. Every time you have new purchase, you're going to revise this price. All right. So and then on 21st May, we are going to issue. So we issue at 45, right? Okay, we issue 45. So now we issue 45, we issue at the same price now. Okay, we issue at the same price. Wow. 5,3,7,5,8. Okay, we issue at the same price. So meaning like this times this. Okay, yeah. Now, so now can I ask you? In total, we have this, but you already issue 45 liters. So left how many liters?
22.5.
22.5. Okay, so we left 22.5, and then the price is still the same, right?
Yeah.
The price is the same, 53758. Okay, the price is the same, and then how much is this? So okay, up to you. You can times or you can take. Okay, this one minus this one. It's the same, right? Okay, yeah. Or you just times also can. Just put here, right? This one times this one. Okay, sama the number. Yeah. Right, okay, so this is your week 2. Okay, then your week 3. Oh, why always not? Oh, yeah. Okay, then we follow by week 3. Yeah. Okay, now week 3, we have new purchase some more. Okay, this time is 0.56 really. Getting more expensive. Okay, so this one, our total, which is this one times this one, right? Okay, now, how about in the following, we issue 37.5. Okay, so 37 point, no, sorry. Oh, we should take we calculate the balance. So how much is your balance here?
82.5.
Yeah, 82.5. How do you get 82? Remaining from week 3 plus our week 4 new purchase. So it's this number. Okay, now, again, when come to how much per unit, this one you need to revise. Okay, you need to revise. So what I do is this one plus this one, right? Okay, and then here I need to find per unit, right? So I take the total value divided by my unit. So it's 0.55389. Okay, 0.55389. Yeah, all right. Okay, so my remaining, after my new purchase, this is my remaining units and this is my price per unit. Okay, now I would like to issue. Okay, we issue 37.5. Okay, 37.5. And then the price is still the same. 389, correct? Yeah, 37.5. We issue at the same price. And then here, okay, you can take this one and this one. Yeah, all right. So now we want to calculate our balance. So how much left at the end? How much left at the end?
45.
45. Actually, your number should be the same as this one, 45. Okay, 45. Now, how do you get 45? Because we have, after new purchase, we have 82.5, then we sold 37.5, so left 45, okay? And the price is still the same, 0.55389. All right, okay, so this one, up to you. You want to, okay, let's say I do like this. So number should be the same, so 24.93, right? Okay, so done. Yeah, finished. Okay, done. Okay, then now I want to calculate how much is my total purchases. How much is my total purchases? Okay. Yeah, like this. How much is my total purchases? So, okay, add up.
142.
Actually, this one no need to calculate. You also know the answer because just now we already done for first in, first out. The number should be the same. The number should be the same. And how much you have issued? This one you need to recalculate. Then the amount, the total amount might not be the same. Okay, so amount will be this one, yeah, right? Okay, and our closing stock is this one. Yeah, so if you look at these two methods, if you look at these two methods, so let me make it smaller. Now, if you look at these two methods, you can see, right? These two methods. So you see the remaining, your remaining in terms of units, in terms of liter is the same, right? Okay, now of course your price is not the same, no? And the total, the value also not the same. This is 25,200. This one, 24,900, 24,930. Yeah. So after you got this, so do you know which method give you a higher gross profit? Which method give you a higher gross profit?
The weighted average.
The weighted average. You sure? Okay, let's.
Because, oh yeah.
Yeah. Which one give you a higher? Okay, never mind. You can take a wild guess now. Okay. So come, we calculate. So now we want to find out which one actually give us more higher profit, right? Okay, which one give us higher profit? So meaning we need to do trading account. Okay, we need to do trading account, right? Okay, so I put my trading account here. Okay, trading account for the month. 31st, okay, 31st May 2018, right? Okay, yeah, that's it. Actually, no date also, it doesn't matter, actually. Yeah, right? Okay, put like this. Then we are going to put okay, according to this format. Okay, oh, so become like this already. Yeah, so I'm going to put both method. First in, first out, and weighted average. Yeah, okay, WAC weighted average. Right. Okay, so okay. Okay. Right, like this. So I have two methods. I have two methods. So I can actually put this okay, what? Put a line in between. Oh yeah, what happened? I always cannot draw. I very have to very slow. Okay, so like this. So I draw table nicely like this. Okay, yeah. Now, trading account, first item is sales, right? So do you know how much she sells? Do you know how much she sells? Okay, now this one, right? Okay, you can actually do the calculation now. So now you can actually get from your question. So your question says sales we right this unit 25 third week and fourth week, right? Okay, then we sell at how much? So this is 0.6, 0.65, 0.68, and 0.7. All these from your question, okay? Then you times off. So in total, how much? So this is in total, meaning our sales is 146,100. Yeah, this is our total sales. Okay, this is total sales. So you see, total sales you need to calculate on your own, right? So this is our total sales. What we want is actually this number here. Okay. If I put this, right? Yeah. Okay. So now we found our sales already, right? So we put here. Okay. Whichever method you use, your sales is the same amount, right? The sales would be at the same amount. So this one I put 1,000 separate. Okay. So no matter first in first out with the average, the sales value should be the same, right? Okay. Then followed by this one, the format. Please make sure you remember. This one for sure in exam definitely will come up. Okay, now, do you have any opening stock? Right? Do you have any opening stock? Do you have any opening stock? If you don't have any opening stock, then just so
No.
no, right? Okay. If no, then you just put 0, 0. Then followed by purchases. Yeah. So this is the format. Right? Followed by purchases. Okay. Then our purchases, which is our purchases is now our purchases actually we already calculated. Here. These are our purchases, right? You see? Receive ma, purchase ma, right? Okay, so 142. Okay, now again, whichever method that you use, whichever method that you use, your this purchases is the same.
Miss, why the cells different?
Huh? Sorry?
Why the cells are same? The FIFO and the weighted average.
Yeah, same. Sales is the same. Why not the same?
Oh, I see.
Sale is the same.
Okay.
The only difference is the closing stock value is not the same. Yeah.
Oh,
Okay, then your closing stock. Right? Okay, so this one, second class. Okay, don't skip. If I skip later, you don't know what's going on. Okay. Okay, so now then we less closing stock. Okay, how much is your closing stock according to first in, first out? First in, first out closing stock is here, right? Yes. So 25, right? Closing stock is this much. And this one should be a negative number because it's minus. How about this one? How much is the closing stock? Can you see where is the closing stock?
For 24.93.
Yeah. 24.93. Okay, so it's actually this number times 1000. Okay, so it's actually this one. Yeah. Okay. With decimal everything, right? So now we need to minus. Okay, we need to minus. So this is the number. Correct? We need a minus. So we got this number. Or we need a minus. Opening plus purchases, then opening plus purchases, then minus closing stock. Okay. So now this one is basically here, right? Add up. Okay. Correct? Like this? Yeah. And then go. Right. And this is a cost of goods. So the cost of goods is less. So meaning this one is negative as well. But here we also put a negative. Right? Yeah, we also put a negative like this. Then here, then we actually perform. Right, sales minus cost of goods sold. Okay, this is your gross profit. Now tell me, which method will give you a higher profit?
Oh, it's FIFO.
Yes, first in, first out. It's first in, first out now. See, this is your closing stock. When you use different method, your closing stock is different. So you see, when you calculate this table, first in, first out, and weighted average, at the end, your closing stock value is not going to be the same. Your number of units is the same, like 45 liter for 45 liter. Okay, in terms of units, a liter is the same one, right? But your price is different. Okay, so here you got your answer.
But is this still possible for first in, first out to have less gross profit?
No. First in, first out will give you a higher profit always because your closing stock value is higher, right? Now, the higher your closing stock, the higher will be your profit. Do you agree? The higher is your closing stock, the higher will be your profit, right? You see, you compare. This closing stock is higher than this one, so end up the profit also higher. You see, sales is the same, huh? No opening stock. No, purchases is the same, right? So remember these rules. The higher the closing stock, the higher will be the profit. Okay. So answer your question, huh? So part B actually, part B, yeah, and then yeah. So they actually ask you the question. So answer your question, Nebula. All right. Calculate using weighted average growth in sales. Go back. Okay, right? So like this. And then part C. So this is part A and B done already, and you found your answer. The answer is first in, first out will give you a higher gross profit. So basically, first in, first out will have a higher closing stock. Higher closing stock will bring to a higher profit, right? Okay, and then next is actually the theory. Now, the theory question, just now ask what it is. So you say in 4 weeks' time, in June, he expect unleaded petrol tank to be full, Which inventory valuation method will give the higher profit? Oh, okay. So you already have the answer, but okay, I can show you. This is my answer. This is what we did just now, right? Okay, so you did just now, and how you calculate your total sales. Here you put your selling price, but in this stock cut, this actually we call stock cut. In this stock cut, please put that cost. Please put cost. Remember, please put at cost. Yeah, don't blah 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 and put at the selling price. No, so selling price is actually for you to calculate your total sales. So see, total sales. Yeah, all right, okay. So if you look at this one, what is the comment like? So the comment here says, if purchase prices are rising, first in first out inventory valuation will result in a higher profit than the weighted average valuation. Yeah, no matter how, first in first out will always give you a higher closing stock. Higher closing stock will bring a higher profit. So this is because inventory issued as cost of goods sold is valued at the earlier purchase price, which is lower than its weighted average price. So closing inventory in the first in first out method is valued at the most recent purchase price, which is higher than its weighted average price. So first in first out, you always, what you have on hand is always the latest one, right? So that's why your closing stock will be higher, isn't it? You always hold the latest one. First in first out is the old one you issue first. The one that you receive, you issue first. The round number you receive, you issue first. So always your closing stock is the latest, right? Always your closing stock is the latest. If the latest, normally the price is higher. Because the question I just said, what happens if the price keep going up? So meaning if keep going up, the latest one, the price will be the highest one, right? The latest one, the price will be the highest one. So with a higher closing stock, will give you a higher profit. Okay? Yeah, remember this one? Huh? All right. So this is actually your question 4, which is I show you both methods. Yeah. Now again, when you do homework, when you are not very sure, please open up your lecture notes. Okay? Open your lecture note and see from there. Yeah, open your lecture note and see from there. Now tutorial 7 and tutorial 8, not yet, right? You haven't done, right? Okay, so I think it's better that Monday is tutorial 8, right? Then before your next class, you have to hand in your tutorial 8 answer already. Okay, then Thursday we will do another chapter already. So you see 1 week 2 chapter actually very fast, right? Yeah, it's actually very fast. Short semester, everything will be faster. Okay, so I already done the most difficult one. So the rest is your turn. Yeah, it's actually your turn. Okay, now I want to show you your test. Test. Okay, I open up both question and answer so that I can actually. All right, so for it's the answer. Okay, here's the question. All right, now show journal entry. Okay, this one is actually show journal entry, right? Debit credit. Show journal entry meaning your answer is like this. Right, your answer is like this. Kelvin, you see this journal entry? Yeah, I think
Okay, like this one, like this.
Yeah, I like this only. Why your answer so complicated? Now you see why you answer like this. Hui has a car repair business. Okay?
I thought the debit and
No.
credit need to split those.
No. Yeah, okay. It's a car repair business. She contributed 500 cash to be used in office and 10,000 into the business bank account. And her van is being used to transport all the business goods. So the value of the van at the time was estimated to be 20,000. So meaning this is actually telling you that okay, actually start a new business, car repair business. So actually contribute 500 cash. Okay, and then 500 cash and then 10,000 bank into the bank account. So meaning you have capital cash, you have capital bank, right? And then you also brought in a van. You also brought in the bank. All right. Okay. So you debit cash, isn't it? Right? You debit cash, you debit bank, and you debit motor vehicle. Then what do you credit? You credit your capital. Isn't it? Correct. Now you think back, Kevin. Correct, right? So you look at your answer. I don't understand your answer.
I also
Yeah, your
I see
answer
that
partly.
I see our answer the wrong way.
Yeah, your answer partly correct only lah, partly lah. Okay, yeah, partly, right? Can Okay, now Hui Ti has purchased several car parts of use in her repair business. Yeah, purchased car parts. She paid 5,000 in cash for it. Now, this car part is actually used because you actually service car. So you need to buy some parts lah, isn't it? So this is your purchases. Okay? Purchases. Yeah, it's actually your purchases. So you debit purchases, you credit cash. Okay? In cash, right? The keyword here is in cash. In cash. So you credit cash. Isn't that correct? You credit cash now. Here, if you put bank, also okay lah, cash or bank. Yeah, all right. So like this lah. Okay, then part C. Repair a customer's car and the customer paid 4,000 using his debit card. Yeah. So this one debit card. So we assume this bank right? Because the money have to go through bank, right? Bank. So we go to your bank account Not you don't receive a physical money. So this is So we say this is a sales lah, right? This is actually a sales lah. And you repair car, then a customer pay you. So this is our sales law. So we debit bank we receive, and then we credit sales law. Isn't it correct? Okay, yeah, debit bank, credit sales. Okay, then next. Purchase an air conditioner for her office. She still owe the electrical shop 2,000 for it now. This is you buy aircon. You buy aircon, right? Now, when you buy aircon, this one, aircon is what? This one is what? Capital expenditure or revenue expenditure?
Capital.
Capital.
Yes, capital. Yeah, because you buy aircon. Aircon can use for many years.
This
right?
one count as furniture.
Yeah,
Ah,
yeah. Either you put aircon or you put furniture and fitting also can. So 2,000 and credit what? You see? Oh, still owe. See? The keyword is here, still owe. So meaning it's on credit lah, right? Meaning this one is on credit lah, right? Yeah. So if it's on credit, okay, then you should credit other payable. See? Right? Other payable.
Miss,
Yes.
need to write the ASL enterprise.
If you put other payable, okay lah.
Oh, okay.
Other payable. So you debit aircon, right? You debit your aircon and you credit other payable, right? ASL enterprise. Isn't it? Okay, 5 marks. Yeah, I think Noel okay lah. This one all correct. Farrell, I think maybe not. Okay. This one is also this one everybody got it right. This one very easy, right? Okay, so this one I'm going to skip to save some time. Okay, now question 2. This one, question 2 is actually the cash book, and then ask you to do the posting to lecture, right? Now, some of you actually miss your account. Yeah, right. Now, this one, okay, yeah. This one, do you have an opening balance? This one, the opening balance or not? Lydia is a sole trader. Record all her cash and bank transaction in a 3-column cash book, right? 3-column cash book. So basically, the question asks you to do 3-column cash book. On 1st November 2021, she has a balance in her bank account.
I think I got put the capital. I think.
Yeah. Do you put the opening?
I didn't put the balance thing. I put capital and then I put the bank.
Yeah. So you don't put capital because this is the opening balance, right? Okay. So let's see. Okay. Now record all the above transaction into 3-column cash book. So you're asked to do 3-column cash book. And after that, you need to close the account, right? Okay, isn't it? And then close the cash book. Okay. Record the transaction into the related T accounts. Related T account. So meaning you look at your debit side, you look at your 3-column cash book, debit side, credit side. All the related account you have to prepare. Yeah, all right. Okay. So come to the answer. So here you have an opening balance, right? So you should put balance BD. Okay, balance BD, is that correct? Balance BD, 20,000, right, at bank. Yeah, you follow what the question say lah, correct? Huh? Okay. And then on the third, receive 260 by check in settlement of owing by Peter after deducting a cash discount of 40. Now, we received 260 after deducting 40. So meaning originally it's 300, right? Originally it's actually 300, is it? So discount allowed 40 and bank 260. Okay, this one no problem. Okay, next. Cash sales, cash purchases. This one easy lah. Cash sales, you debit cash law. Is it? Cash sales is here. You debit cash, you credit sales. So you will have a sales account. Now, and then we have a what? We have a cash purchases, this one, right? Cash purchases. Cash purchases is we debit purchases, we credit cash. Okay, then you need to prepare a T account called purchases, right? A T account called purchases. This one okay lah, everybody got it right. Then we come to this one. Paid in cash for invoices of 600 owing to David who gave a cash discount of 50. Yeah, paid in cash for invoices. 600 owing to David who gave a cash discount of 50. Now, in total is 600, but David gave us 50 discount. So meaning how much we receive after discount. This one I think somebody got it wrong. So the discount is 50, so remaining is 550. Yeah, remaining is 550. And here stay is cash, okay, in cash, yeah, in cash. So the answer should be like this, all right? Okay, next, bought stationery, paying by cash. This one very easy lah. Stationery, cash column, yeah, stationery, cash, debit, stationery, credit, cash. Paid salary through an online bank transfer, 1,400. Okay, paid salaries through an online bank transfer, 1,400. Yeah, so it's an online bank transfer. So meaning by bank. So debit salary, credit bank, right? Debit salary, credit bank. Okay, and then bought furniture paying by check, 900. Bought furniture by check. So meaning debit furniture, credit bank. Debit furniture, credit bank. Yeah, debit furniture, credit bank. Okay, then next, withdrew 2,000 cash from the bank for business use. Withdrew 2,000 cash from the bank for business use. So meaning this is a contra, right? So credit, what do you credit?
Credit bank.
Yes. Debit cash, right? Debit cash, credit bank. Yeah. Debit cash, credit bank. Correct? Yeah. Debit cash, credit bank. Okay. Debit cash,
This
credit
one.
bank.
I got C instead of the tick.
Yeah. Also can. It's the same. Yeah, I know you all put tick also can. C means contra, CONTRA. Yeah. You put tick also can, you put C also can. Okay?
Oh,
And then the next one is 28. Paid cash 120 to settle electricity owed to Tenaga Nasional Berhad for last month's bill. Paid cash 120 to settle. Right? Okay. So this one is electricity bill. So you debit electricity, you credit cash. Yeah. Debit electricity bill, credit cash. So you can put Tenaga Nasional Berhad, other payable electricity also can credit cash. All right. And the last one, withdrew 30 cash from the business bank account to pay for owner's water bill. Now this one is cash or bank? Cash or bank, this one?
bank.
Yeah, it's actually bank. But a lot of you put cash. Withdrew 30 cash from the business bank account. So the answer is credit bank. Drawings.
Oh yeah, I put cash out.
Okay,
Yeah,
so it's a
I-
bank. So read your question carefully. This is slightly, a little bit tricky lah. Okay. Then you calculate your balance CD lor. Yeah. Okay. And then the total here. You see, this one got marks. Kelvin forgot to put this number. So how we give you marks?
Oh, the 50 there need to put.
Yeah, you have to put
Oops.
you put the debit discount lot, then discount receipt you forgot. Okay, so half mark gone already.
Oh, oops.
Okay, yeah. Half mark gone already, right? So this one actually got marks on. So you count, is it got 20 times half marks or 10 marks? Okay, so after you have done this one, right? Okay, so based on this answer, then you should do the posting to your lecture lah. So you have sales account, right? The cash sales, right? Okay, now see the account correct, half mark, number correct, half mark. Okay, discount allowed. You have discount allowed, right? Purchases, discount received, trade receivable Peter, then we have trade payable debit. Okay, we have stationery, salary, furniture, isn't it? Insurance receipt, correct? And we have electricity, right? We actually paid for our electricity bill, and we also have drawings. Yeah, so these are the account. Now, I think this one nobody got it all full mark because some of you actually missed here and there. Okay, miss here and there. Now, the question that carries most marks should be cash flow. Actually, this one is easy, but the thing is, some of you miss out some of the account. Actually, very simple. If you don't want to miss, you base on your this one here. Yeah, you look at your 3-column cash flow. You will never miss. Opening no need to open now. So you see, you have purchases now. This is your trade payable, stationery, salary, right? Get furniture. Okay, cash no need now because this you already show in the cash book now. Okay, and then this electricity bill, this drawing, and then you go to your debit side. That yeah. So that's how you do it. So you actually you can do it. You can have a perfect answer easily. Not an issue. Yeah, you can have perfect answer easily. Can or not? So very easy, right? Yeah, actually your question is actually okay, it's actually very easy. Yeah, everybody should pass. Right, now this one, question 3. Question 3 is, what do they ask you to do? They ask you to do prepare all the related books of prime entry. Okay, cash book, except cash book is provided. Yeah.
Do we need to do the 3-column thing?
3-column.
So this the A, the table there.
This one.
Yeah. That one don't need, right?
This one no need. This one actually the question already give you this one, but no need. Yeah, the question only want you to do the prime book of entry. Only prepare all the related books of prime book of entry. And then prepare all accounts in purchases ledger and sales ledger. Yeah, and then prepare trade payable control and trade receivable control and return outwards account. Like this. And this one is actually given. Correct? Yeah, it's actually given. Yeah, so they actually given you this one. Okay, so if you look at your answer, so it said 1st November, MJ and Fry had the following balances is purchases ledger. Now, so you see we have closer is our supplier. All the opening balance here. See, this is our supplier. Closer has opening balance 400. Past has 500, right? Okay, MJ Enterprise also had the following balance in its sales ledger. This is our customer. Yeah, okay. And then we have MJ is first lah. Okay. Pricing is our customer, 600 balance, and Blessed is actually 700 opening. So I say all the supplier and the customer's account all come with opening balances. Even Noel also missed this part. You did not do this part, right? Yeah, so that's why. Yeah, here you already missed 2 marks already.
That one's for the sales, for the ledgers, right? Not
Yeah,
for
the sales ledger and the purchases ledger.
Yeah, that one no time to.
Yeah, the individual account. Yeah, the individual account, right? Okay, and then you start with November 1st. Then you start to do recording of now. November 1st we bought from Closer. This is the invoice number. How much is the price? 2,000 with discount. Isn't it? So you do recording now. This one is in purchases journal, right? Okay, I think purchases journal. So please put down this one, purchases journal. So I highlight this one must put. And this one must put. Yeah, these are the things that you have to do. And this one must be the last day. Okay, it must be the last day of that month because you actually close month by month. Can. So you must put purchases journal and then read your question whether it's a purchase, it's a credit purchase or it's a credit sales. So if you see cash sales, forget it. Yeah, unless the question asks you to do cash book, okay, then you can record in cash book. But if there's no need to do cash book, then forget it lah. You just skip. Isn't it easy, right? You put your trade payable here. Let's trade discount. The question said got trade discount. Invoice number, retail price 2,000 and 20% discount, so left this much. Can. Yeah. So now if I show you the answer, you will say, ah yeah, it's that easy. Yeah, it's
Okay,
this
only
easy.
two, no, not
Yeah, only two
also.
only two. Closer
Only-
and pass. Okay. Closer and pass.
Oh yeah, only two
Yeah.
purchases.
All right, only two, right? Yeah, and this two is sales. Hey, this question is very easy. They did not test you, a lot of some other thing that is not necessary. Actually, this is actually quite easy, Yeah, so really have to, yeah. Right? So you see your answer like this. I think I show you like this, you know what to do really. So, okay. So please, now, if you did not get it or everything correct, right? Okay, you can do, and then you hand in, then I mark for you. Yeah, all right. So that you go and do correction, or else you never learn. I am very worried now. I wonder you can pass or not. Yeah, remember our target is 100% pass. Remember, so must pass because you are IT student. If this semester you fail, receipt is not so easy because you have forgotten. Yeah. So don't fail. You must pass this semester. Yeah. When we are still having class, then you still have a chance to ask question. Yeah. Don't fail. All right. So go and do correction. Everybody must do correction and hand in. So tell me, when can you hand in your correction? How fast you can do your work? I know you have other work, so that's why I give you. Okay. Now, actually, those who fail, I want to say, when I give you the freedom, because before this, I never say when you need to hand in, right? Like, open to you as long as you hand in. But then some of you delay and delay, right? So from this week onwards, you don't delay anymore. If you delay, I worry later you cannot pass. Then how? So I'm sure everybody want to pass, right? So if you want to pass, you need to put some effort. Or else how to pass? How to pass? So must do homework lah. You have to get yourself familiar. If you're not familiar, then it will be a bit difficult one. Yeah. So now I show you this answer. Actually, this one, right, you can actually do it. Yeah. You don't know how to do opener and lecture note. That's how you actually learn faster. If I keep feeding you the answer, you see me do it easy, but you have to do it on your own. Then only you know the real problem. Right? Okay, so this one you have to do the correction. Yeah. So okay lah. Since you have tutorial question, right? This week got 2 tutorial, right? And then you have this one. So the latest is this Sunday. Yeah. So this Sunday, so meaning this week you must do your 2 tutorial. You must hand in 2 tutorial and a test answer. So you have 3 things to do. So I give you latest up to Sunday. Okay, this Sunday. Okay. Up to this Sunday is 1 week, Okay, then another week. Do you know that this week is already week 5? Yeah. So you see, week 5, week 6, week 7, 3 more weeks, then it's your exam already. So you better hurry up. Okay, better hurry up. Oh, you've got time, please go and do your past year. Right? Okay, now, so journal, okay, and return outwards. Okay. Purchases ledger is your supplier. See, individual account. Now, here, this one, you see half mark. So if you did not put this opening balance, basically you already lose 2 marks. Oh, 2 marks already fly away because you did not put. You see, got marks on, right? Okay, so this is your individual according to what you have recorded in your journal. Okay, sales ledger is your customer. Okay, your customer. All right. Yeah, I think Noel, your answer is okay, just that you forgot about the opening balance. Then your closing balance, is wrong. Yeah, right. So that's why your closing balance, you got no mark. Okay, so another 2 marks gone, isn't it? So 4 marks gone already. All right. Okay, yeah. And this is your trade payable. Yeah, control account. The question they ask you to do, right? This one is actually the total. Yeah, you put the total. The total. Trade receivable total. You have 2 supplier, the 2 supplier total. Trade receivable is the 2 customer total. Yeah, all right. Again, your opening balance have to put. See, now you forgot to consider the opening balance. 3 marks gone already. Here another half. So 3 marks. Opening balance forgot. Okay, return outwards. This one you transfer from your journal, right? Transfer from your journal. Yeah. Okay. This one. Oh, this one. This one. I think at most you only get 3 steps correct. The answer is actually this one. Yeah. So what is the question like? Let's see. Arrange the phrases found below in the form step 1 to 8. So what is your step number 1, step number 2, step number 3? Meaning this is what? When you actually sell to your customer, right? Okay, when you actually sell to your customer. Okay, so now let's see. First, you must take the order, right? Okay, after you receive the order, then you go and check the customer credit worthiness. Why? Because the customer asks for on credit, so you cannot simply say yes lah. You have to check the customer background first. Okay, then you pick the goods from the warehouse, then you ship to the customer. Okay, send invoice, right? And then you're going to update the receivable account. Yeah, you have to update today I send how many units. Okay, record so that you know how much you are going to ask this customer to pay in the future. Okay, then you update the inventory records and then you post to your general ledger. So this is actually your end step. Okay, yeah, these are your steps. All right, okay, these are your steps.
Miss, the number 6 is the ledger.
Number 6, update trade receivable account. Yeah, ledger, like your sales ledger. In your sales ledger, you update to the individual account. Yeah.
Okay.
Okay. Right. So this is your test answer. Okay. So this week you have a lot of work to do, huh? So latest, by this Sunday, tutorial 8, tutorial 9, and this test, everybody have to do correction. Make sure your answer is correct. So you want to know
correction to question 3 only.
No. Whichever part that you did not get it right, please do.
Oh. Okay.
Okay. Coursework like this. Yeah. Whichever part that you did not get it all correct, then please do correction. Or else, if you don't do correction, then later at the end of the semester, you totally forgot whatever you learned in your week 1, week 2, week 3 already. Yeah. All right. So, somehow you might think that I'm a bit harsh to you, but my intention is I would like you to sit down and do your work so that you know what is going on, so that you are able to pass the final exam. That is my intention. Okay. Yeah, I hope you all understand, right? My intention. All right. So do you have any other question to ask? Okay, must do inventory. Very, very important. This one, I think quite sure that it will come up in your past year, in your exam, coming exam. Okay?
Okay.
Okay? So start to do your work. So whenever you're free, just have to sit down and do your work. All right? Okay, if no other question, then I'll see you on Thursday. So in between, if you have any question, just text me. I don't mind. Yeah? All right? Okay. Yep. Take care. See you.
Thank you.
Okay, thank you. Bye-bye.